How to find high probability intraday trading opportunities. Again, my name is Don Kaufman and you are watching a Theo Trade presentation. We have a risk disclosure. We're not financial advisors nor broker dealer. I spent a lot of years in the brokerage business. I'm out of the contest and happy to be out of the brokerage business here because that regulation is just no fun. With that copyright disclaimer, this is ours. This is not yours. One of the things I want you guys to know right up front, see this address right here? Support at TheoTrade.com. If you ever have to get a hold of me, after today's session or at any point in the future, please, by all means, okay, shoot me an email. Again, this is a common inbox. Just put Don in the heading and that'll get to me. We are based out of none other than Scottsdale, Arizona. But I was asking everybody a minute ago, where is everybody joining us from? I will be broadcasting this afternoon. I am live in St. Croix in the U.S. Virgin Islands. I'm going to live down here for at least a few months, checking it out. The kids are not in school right now, obviously, since a lot of the COVID outbreaks. So I figured, why not? And there's actually an entire enclave of traders that live here, specifically in St. Croix, and I've actually joined them. I've now been down here. I'm in my second week in this area. So nice. There's people from all over, right? Christchurch, New Zealand. Nice. All right. I've actually spent quite a bit of time there as well. So listen, this is why you're here today. By the end of the webcast, I always want people to be able to walk away with something definitive. And what I'm going to discuss in quite some detail, and I'm going to actually show you a couple of trades. This is great because a lot of what I'm going to do today is about intraday trading. The markets have just closed, okay? I traded today as I do pretty much each and every day. But today it's going to be a little bit unique because I'm actually going to show you positions, all right? Like here, now, executions of trades that just happened, within the last couple of hours. So a few of the areas that we have to cover prior to getting too deep into the trading side of things is how to generate high probability outcomes with intraday trade setups. Obviously, that's what you're here for. But we're actually going to talk about how to select the right options for intraday trading. Yeah, you're going to look at a couple of option trades. Is that all right with everybody? There are some people that are always like, dead set, like, I'm not going to learn about options. All right, you can trade stocks, you can trade futures with this, but you're going to see a very interesting setup specific to options. Number three is possibly the most important aspect that I could drill into you before we even start. Okay. Number three is just critical. How you can be right less than 50% of the time and still receive consistent trading results. Think about that for a second, because I always challenge people right off the bat. Can your strategy, do that? And you're going to see that specifically. Number four, why intraday trading does not mean you need to be glued to your screen all day. You're actually going to see a trade today that I executed early on in the trading day and closed about an hour and 20 minutes before the close here. I was not in front of my screens throughout the course of the day. And for those of you, if you have concern about the day trading margin rule, you can circumnavigate the day trading margin restrictions with a bunch of different alternatives. They've made that easier now than ever before. And I wanted to enunciate that before we got too detailed into that. All right with everybody? So if you're worried about, I have a $5,000 account, it's fine. Actually, the trade I did today, I had, you could have done with as little as $68 at risk. And I'll show you that trade here in just a moment. Before I go too deep, our gift to you today, stay with me until the end of the webcast. There is an indicator, and this indicator I use all the time in intraday trade, and it's cumulative ticks and quad indicator. All right, and it's a $497 value, and I'm going to give you a link to the indicator right at the end of this afternoon's webcast. And we do this because, there's so many different firms out there that sell indicators, they push indicators down your throat. You have to take classes just to be able to get the indicator. Listen, what I'm going to discuss today, I use this indicator. This indicator can help you quite extensively, I believe, especially with intraday trade. And if I'm going to talk about it and tell you that I use it, then it's only fair that we provide that to you. Again, incentivize you to stay tuned until the end of the webcast here. And don't forget, I will literally give you a link at the end of this webcast specifically to this particular indicator. I say this indicator. Here, this is actually the S&Ps. You know what? Again, normally I take screenshots and I take screenshots of this and screenshots of that, right? You know what? We don't need no stinking screenshots. Why? Here you go. This is a live trading application. If you're unfamiliar with this trading application, the trading application is called Thinkorswim. How many people here know what Thinkorswim is, right? Is that fair? I'm going to use Thinkorswim. I also use Tastyworks. So those are the two main brokerage platforms that I currently use. Thinkorswim, which of course was TD Ameritrade, is now owned by none other than Charles Schwab. I'll talk to you about this in a moment, but a lot of what you see on the Thinkorswim platform, this is not only where I worked. Thinkorswim is, it's partially my baby. If you've ever been on the Thinkorswim Analyze tab, I think I'm related to the Thinkorswim Analyze tab. I legitimately spent over 15 years of my life working and helping develop aspects of the analytics, specifically of Thinkorswim. And it's part of my background, obviously, in this business. But what you're looking at right now, this is the free indicator that I was discussing. Okay, I'm going to close up this left side bar. So this is the free indicator that I was discussing. And what this indicator helps you do, okay, it's a quantitative tool. And, you're like, oh, it doesn't look like much. What you're actually looking at here, and it's, I don't have the labels turned on here. This is the Russell, and it's the NYSE, which is the New York Stock Exchange, the NASDAQ, okay, and the S&P 500, and they're all ticks, okay, and tick indicators. And by tick, I mean, it's like the NYSE tick. It's a leading edge indicator for comparing and quantifying intraday tick. So if there's big sell side activity in the marketplace, you're going to feel it in the tick even before, all right, that you're starting to see some of that sell side activity kind of permeate into the S&Ps themselves. In addition to it, there's advanced decline line, there's market breadth, okay, all of it is encompassed. And again, it's a very quantitative tool. Now, this is the screenshot, but I figured I'd just show you this, and we will provide the link specific to that at the end of this evening's webcast. So a few housekeeping items. One thing I'm gonna beat you up on a little bit. Listen, today, I know that a lot of people go to different webcasts. I mean, how many of you guys have gone to webcasts? In the past, here, there, everywhere, right? Go to a lot of webcasts and a little bit of a song and dance, and it's follow the bouncing ball, and it's red and green flashing arrows. This is far from it. This is a skill set. If you want to learn this stuff, pay attention. Okay, bottom line, listen, you took the time to be here. This is important. Focus on being here. Close Facebook, shut the door. And people are easily distracted by everything, especially traders. Turn off Skype chat, whatever else is distracting you. Kick out the kids. Definitely kick out the kids. Kick out the grandkids if you have any with you. Dog can stay. I'm all about the dog. But with all due respect, we're going to move at a pretty good clip today. And this is not going to be like, some, again, follow the bouncing ball. This is going to be logic, and this is a skill set, and you're going to know that here. So here's a little bit about my background. Okay, my background. Why am I here? I watched order flow for 15 years, and that it really is in large part why I'm here. I've got a very unique skill set that there's a handful of people in the world, and everybody always talks about, I learned to trade this, and it's a couple hours a day. Well, I got to tell you right now, first and foremost, I grew up around traders. Okay, I didn't start in this business in my late 20s, whatever. I'm in my 40s now. I'm 44 years old. I've been around trading literally my entire life. I grew up around it. All right, not a lot of people have that depth and experience. I had an uncle that was a market maker that started trading in 1970s, and he started specifically started a trading firm in 76. It was the year I was born. He started a trading firm in 76 with one seat on the Chicago Board Options Exchange. And by 1983, he had owned over 500 seats on exchanges worldwide. So I grew up around, this uncle I had that became a multi-billionaire. He sold the firm. The firm was called O'Connor and Associates, and the firm actually sold in 1992 to the Swiss bank. And it was a multi-billion-dollar deal. He was obviously he's the founder of it, so he did quite well in there. And I called in a favor when I was out of college, and hey, I started trading. So 3 weeks out of college, which is in the late 90s, I started trading. That's how I got involved in it. And shortly thereafter, it was only about 18 months thereafter, I kind of got drafted into a startup brokerage firm, and that startup brokerage firm was Thinkorswim. So that's a little bit about my background, and so that's how I got to Thinkorswim. I met some of the founders of Thinkorswim on the trading floor. I was employee number 13 there. I went on to actually build the education division of Thinkorswim. I then went on to run the education division of TD Ameritrade. Now, along the way, we took the company public. I was on the executive team that took Thinkorswim public in 2007. I was there for the acquisition, which we were purchased for about $680 million by none other than TD Ameritrade. I went on to, again, run TD Ameritrade education, all of the education, for 7 million clients at the time. And one of the best, portions of experience of that, that entire run, which is a spectacular run, but one of the best portions of it, I got access to everything that you did, and I got to watch the order flow. And when I say that I had access to everything you did, and people say, oh, order flow, what is that? I got to see everything that you as a trader ever did. And at Thinkorswim and TD Ameritrade, we had the largest options order flow in the entire industry. So we studied trades. We know what works, what doesn't work, okay? And we used big data and an entire analytical team. I don't want you guys to think, it's TD Ameritrade. This wasn't me, one monkey sitting behind a computer trying to figure out what works, okay? We had an entire analytical data team that did nothing but answer questions that I asked. And that was one of the best experiences I've ever could have gone on. And I'll tell you what, I don't think that I appreciated it nearly as much at the time. I didn't like working in a big organization. I worked in a firm. We had 13 people when I started at Thinkorswim. I turned around a couple years later, we had 7,000 total employees at TD Ameritrade. Hundreds of people reported to me at the last position I carried there in 2015. Was more than thrilled to get out of there. As I said, I didn't appreciate it then, but we got to see what works best for retail traders. Listen, it doesn't matter about my market making experience. It doesn't matter that I work for a trading firm. None of that matters. What matters is that you need to know what works best for retail traders. And that's why I said I have kind of a special skill set that very few people in this industry have, which is it's great for you. And that's what I'm going to explain a little bit about to you. So I still do some media appearances. This is actually TD Ameritrade TV. The only reason I have this one up here, this is the last time I was in studio. I actually did TD Ameritrade TV yesterday, live from from St. Croix in the U.S. Virgin Islands. So there's nothing like doing a broadcast when you're on a small island to really, that always gets under everybody's skin. They're like, great, he's on a beach. He's on a beach, and I'm over here suffering in downtown Chicago. So I enjoy that. I still do CNBC from time to time. This is the most memorable of them. That is myself, pitted against the man himself. It's Kevin O'Leary. Shark, by the way, ruined it for everybody. He couldn't have been a nicer guy. Listen, embrace the chaos, people. Yeah, there's a lot of chaos obviously going on in this marketplace, but I want you to remember something about everything that we're going through right now. And that comes down to what makes money in the market. And what makes money in the market? Volatility. Most people don't feel that way in the midst of it. Okay. But, yeah, the volatility is a very, very good thing. And I always try to instill that, if you've been knocked around a little bit lately, listen, volatility is a good thing. Let's all remember that. So before we go too deep into, we're going to look at a couple of trades, a couple of trading opportunities. Everybody right with that? All right. Before I go too deep, there are some key components that you have to understand as traders, okay? One of the first things, again, I'm actually going to reference the Thinkorswim platform a bit throughout the course, okay, of this afternoon's session. All right. And when I say I'm going to reference it, listen, all I'm doing is pulling up different symbols over here. This is the S&P futures. If you're curious, by the way, I believe, okay, in full disclosure of everything, whether I have a winning day, whether I have a losing day, I like to display everything to you because there is an incredible amount of crap in this business. Okay. I trade with a few $1 million amongst multiple accounts. That's not going to be true of everybody. I do have portfolio margin, okay, on one of my accounts. Most of the stuff that I do, like today, I'm actually going to show you trades out of an IRA account. Okay. If you're interested in, what people make in a given day, this is 2 out of my 3 primary accounts. Okay. You can actually see a couple of different accounts over here, yada, yada, yada. Take a quick glance right here. That is my P&L on the day, okay, for better, for worse. And maybe you think it's a lot, maybe you don't, okay? I'm only tying up right now in these 2 accounts, $88,922. That is my margin requirement. Okay, that's my margin requirement in both accounts. And I just, again, full disclosure. So I'm tying up close to $90,000 in capital. And again, I have, between leverage and everything, well over $1 million available to me. I turned a profit today of $5,000. Well, it's still bouncing around, apparently $18, which is kind of par for the course with the amount of capital that I have at risk. You'll see my account bounce around anywhere from $5,000 to $8,000 on any given day. And I'll reference this because again, I'm always putting on trades, and you'll look through here and the P&L and so forth. We're going to look at this a little bit because again, rather than take a bunch of screenshots, I figured I would show you live some of the crap I do in my account. And I think that's the only way to do this now. So a few Theo Trade principles. Listen, we're going to focus on intraday setups here. Intraday, which means you're willing to actually fire off a trade today and close it today, right? You're in on one day, out on the same day. However, it's critical to distinguish effective trade performance. It's based, okay, on 3 factors: trade logic, capital allocation, directional bias. Obey the rules. That easy, right? Trade logic, capital allocation, directional bias. Well, before I go any further than this, a lot of people look at this and they go, whatever, man, whatever. Trade logic, do you have any? Capital allocation, directional bias. The reason I wanted to detail this a little bit to begin with, most webcasts people go through, you listen to something in most education they go through, okay, everybody puts directional bias, all right, as the primary kind of aspect of how you're going to make money. Really? Let me tell you, how often do you think you're going to be right? I think that's a fair question to ask. How often do you think you're going to be right? And are you willing to bet? You're going to bet every single day. I mean, some of you, your life savings, you're going to bet your life savings that you're going to be right more than half the time in the marketplace. And it's fine. Some of you probably have some experience trading. You're like, I'm right 70% of the time. If you're right 70% of the time, fantastic. I'm not here to tell you otherwise, but I am here to tell you that trade logic has to be put at the forefront of everything you do. And if you're unfamiliar with trade logic, listen, I'm going to explain that. And what that means is how you approach trades is vastly more important than being right or wrong on the markets. I mean, you realize that everything that you do and everything that you see in this business, okay, like you turn on CNBC, what do you think of the market? What do you think of the market? What is the market going to do next? Okay, this is intraday trade. You're in and out and on with your life all in the exact same day. Why do I need to turn on some financial media, okay, in the background other than pure noise? And that's exactly what it is. It's just noise, okay? We're going to put aside for a second being right or wrong directionally. We are going to talk about that tonight, but it's not going to be what you think it is at all. We're not going to talk about a MACD or a Fibonacci or a Bollinger Band, right? I don't want to be anti-charts. It's not what it's about. The point I want to make, though, is how many times have you been right directionally, but you still lost money in a trade? I'll poke some fun at that. Stop is a 4-letter word, right? Okay. Listen, tonight we're going to cover trade logic first. And I say tonight. Again, depends on your time zone over here. I'm not used to being on Eastern time. So most of the time, again, I reside in Scottsdale, Arizona. Right now, I am on the easternmost area of the Eastern time zone on a small island. I think we're 26 miles across right now on the island. Anyway, the first step tonight, define your trading strategy and break down the logic. I want you to ask yourself in every trade, and you should always ask yourself in every trade, if I were to do this 100 times, what would be my outcome? Right? Many directionally challenged traders can still perform, if given the correct trading logic. You know, when I talk about like directionally challenged, yeah, I'm poking fun a little bit. But what I'm saying is, if you have a tough time finding market bias, even on an intraday basis, you have come to the right place. Listen, you know, people, they get so adamant. I got to be right. I got to be right. Get over yourself. And I'm serious about that. Because you really think a trading firm, these trading firms have billions of dollars, that they're responsible for. They think they sit around in a circle and be like, what does the MACD say? What does the Bollinger Band say? Right? They have a trade logic, and they always adhere to that trade logic. Let's talk a little bit about it. Intraday options and trade logic. In order to create a viable intraday trading strategy, we're going to employ the use of options. Additionally, we're using a defined risk option strategy, as the trade will not have to be monitored the entire trading day. Translation, you don't have to be glued to the screen all day. I'm going to set this one and I'm going to forget it. By the way, today could not be a better example. I'm going to tell you about my day, and my day has been a little bit crazy here. So, listen, not only didn't I monitor my trade today, I could not monitor my trade a portion of today. I had to run around a little bit and had, where I was, no internet, no phone, no nothing. Felt like I was back, 25 years ago. So we're going to put on a defined risk option strategy that doesn't have to be monitored throughout the day. Everybody okay with that? If you have absolutely no options experience, just don't have cause for concern right now. I'll take you through, a very basic example to kind of bring you into scope of that. Now, why do you want to use options intraday? And you got to kind of think about, like, why options? First of all, they're going to have minimal capital exposure. You're going to trade with a couple of bucks at risk. I'll show you my trades here. Number two, they offer weekly options expiration. There's several products that actually have 3 expirations per week. What are those products? The spiders are one of them. There's literally a Monday, a Wednesday, and a Friday expiration. Number 3, offer viable risk reward when used properly. Yeah, you're going to see that here momentarily. There's no need for stops. We don't need no stinking stops. Can be traded in retirement accounts. That's also critical. Avoids the mask risk, sheer magnitude, and the fear produced by futures. Listen, I'm not at all opposed to futures contracts. What I will tell you, though, is this. If you are newer to this business, options are considerably easier to learn, all right, especially trading intraday than futures contracts. Futures contracts can be wild. It can be a lot of risk, but futures contracts, there's a learning curve associated with that. Trades need not be continually monitored throughout the course of the day, and a trader can produce returns far beyond the max risk in any given position. And that's why you want to use options. With that, I'm going to give you a very, very minimal, very basic options, kind of example here, and then we're just going to jump right forward, So, all right. For argument's sake here, and before I go too far, how many people in here have no experience whatsoever using options? Anybody, no experience whatsoever? Come on, people. Admitting is the first step. So how many of you have absolutely no experience? None. All right, a few people, none. So all I want you to do is, so, all right, there's times in here like, almost 1,000 people and 3 or 4 people like, no, I don't have any experience. Okay, that's it, really? Only 3 or 4 people? All right, there comes a fifth one. A fifth person came in there. All right, so we are going to take you through, when I say a very basic example, all I want you to grasp right now, if you have no experience, is big, broad strokes of logic. Like just you don't have to freak out over this stuff. When I say big, broad strokes of logic, first of all, we have a stock, and I'd always like to say that, any fictitious stock I call stock, and let's say stock is trading right at $200. Could be any stock out there. This is our fictitious example. We're not going to buy or sell the stock. Instead, we're going to go out there and buy or sell, in this particular example, a call option. We're going to go out and we're going to buy, okay, a 200, okay, call option. We're going to buy a 200 call. I'll worry about price here momentarily, because obviously you're going to pay something for that call option. But first and foremost, I just want you to understand what a call is. You buy a 200 call. What does the call give you the right to do? It gives you the right to buy the stock at 200. So what's a call give you the right to do? It gives you the right to buy the stock at 200. Do I have to buy the stock at 200? No. Then why am I buying the call? Because I'm buying a 200 call because I want the right to buy the stock at 200, hoping that the stock will appreciate to the upside. Maybe the stock goes all the way up to 210. And if the stock goes to 210, that 200 call is going to be worth what? More money. My intent is to buy the call, simply to turn around and sell the call. And that's it. And if you look at this 200 call, it's going to have a price. And that price, it's going to cost you a whopping $3. How long is that call good for? No more, in this case, than 1 week. So how long, though, are you intending to hold this call for? Today. I'm going to buy it and I'm going to sell it. You could buy it and sell it 2 seconds later. You could buy it and sell it 10 minutes later. You could buy it and sell it 6 hours later. But in this case, we're going to buy the 200 call. And we're going to buy the 200 call and we're going to pay $3. Why do we pay $3? Because that's what it costs. The higher the risk of the stock, the more the options are going to cost. But we're not going to worry about that either. All I want you to understand, in the context of this example, is instead of buying the stock, okay, no stock, we're going to buy the call. And the call is going to have a max risk, and that's also critically important. If you buy a call and the call is trading for $3, the max risk for that particular day is $3. And quite frankly, if this option is good for a week, you couldn't even lose the full $3. You couldn't lose the full $3. But let's take the assumption that you could. Let's mess with it and say, oh man, I might have $3 at risk. Oh me, oh my, oh my. So what happens? If the stock stays flat, you're going to lose some money. If the stock goes down, you're going to lose some money. But if the stock goes up, it's got to go up and got to go up big. You might make a whole lot of money. See, if you have a 200 call, the 200 call gives you the right to buy the stock at what? 200. And if the stock ran all the way to 210, if you have the right to buy the stock at 200, and everybody else in the world has to pay 210, the 200 call must be worth a minimum of what? Okay? What does that 200 call have to be worth minimum? Anybody in here? I like to make these sessions interactive. It's not just me talking to myself, heavily caffeinated. Think about it. You have the right to buy the stock at 200. Everybody else in the world has to pay what? 210. So what's it going to be worth? Okay. Not what you're going to make. What's it going to be worth minimum? Okay. If you have the right to buy the stock at 200 and everybody else in the world has to pay 210, that call has to be worth at least $10. It's actually going to be worth a little bit more than $10 depending upon what we call time value. Okay. But you have the right to buy the stock at 200. Everybody else in the world has to pay 210. If you have the right to buy the stock at 200, you physically could buy the stock at 200 and get out of it at 210 because you could sell it on the open market, but there's no need to do that. The 200 call would be worth a minimum, okay, of $10. And this is where, I love actually doing these to where, the marketplace just closed. Listen, you can go and you can find, all right, how did I end up today? $5,100. You can go out and find some $200 stock. You don't have to look too far, right? Here, you know what? let's use something like Microsoft. Just look at Microsoft. Microsoft's $220. Can everybody see this okay? Because I don't have the fonts blown up. Like, I wasn't expecting to do this, but again, I much prefer using live examples. If this is a $220, okay, stock, if it's a $220 stock, imagine that you bought the 200 call. So I could look at a 200 call, right? There's a 200 call right here, right? And I'm highlighting it for you for a second. And the reason I'm highlighting it for you is the 200 call, okay? And that was the worst job ever of highlighting something. But this right here, this 200 call, dun, 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 what's a 200 call going to be worth minimum? Well, if this is the 200 call and the stock right now is trading at 220, the 200 call has to be trading for a minimum of $20. That's why I'm showing it to you, because the option's really trading for $21. So it's the exact same type of example that we just did momentarily, right? Everybody good? This is where I pause, okay? Let's pause, breathe, people, breathe, because I want to make sure that we understand, okay, at least the very basics of how an option is priced. Anybody need any other explanations? Any questions over here? That's why we're doing it live over here, because we want to make sure that you understand this. Because what we're about to go into is going to get a little bit deeper now. The options logic. And here's an example. In this example, okay, you buy an option on an intraday basis. This means you bail out prior to day's end in every single case. In every single case, we're going to bail out prior to the day's end. This is intraday. The big question, which option do you buy? We're going to try to answer that for you. Risk versus reward is critically important. Now, okay, we're going to get a little deeper here, because this is where the rabbit hole you're going to be tumbling down. This is what we call 100 trades later. And when I say 100 trades later, this is a piece of logic that every major firm, okay, that trades uses. And they don't call it the 100 trades later. They usually call it 1,000 trades later. But basically what it implies is this. It's a scenario. You need to create a trade setup whereby you can be right 50% of the time and still see a degree of profitability. Why? You might not always be correct with your directional bias. Now, I was hitting upon that earlier. Okay? You're like, I'm not going to be correct. Listen, no one's going to make you more accurate in a volatile marketplace. No one, including me. I'm going to help. But it's not about your directional bias. And those that believe it is, you'll spend a year or two in this business. And I'm sure that some of you tonight are in this scenario. You'll spend a year or two in this business just screwing around, trying to figure out what you think the marketplace is going to do. Okay? When you need to understand is, if you could do 100 trades, be right half the time, 50% of the time, and still come out ahead, does it interest you? Okay, is that something you want to do? Because that is exactly where we're headed. Let us view a few live examples in this context, right? When I call it 100 trades later, this is assuming that you're not going to do one trade. You're going to do a trade, and the next day you're going to do it. And the next day you're going to do it. You have to come up with a repeatable strategy, people. Something that doesn't work once, something that works again and again. That's what it means by 100 trades later. Yes, good. So quiet, okay? Everybody just watches the market and, all right, listen, it's closed right now. It's closed, people. It's all over. It's all over. All right. Twitter. Now, time out. I'm giving you an example. Now, I took the screenshots for this example. About 2 weeks ago. And I've been traveling the last 2 weeks. And I took these about 2 weeks ago because I thought that they were excellent just to teach this environment. Okay. And then I'm going to come back around and do a couple live examples. Good? Yeah, good. Okay. What you're looking at here is Twitter. And all I want you to do is just follow along here. Just sit back. Okay. No need to take notes, anything right now. If you can understand what I am doing here with the logic, people, you are far ahead of the game. This is an example inside of Twitter. And again, I don't mind saying the screenshot is about 2 weeks old. Okay. I've just been traveling extensively. I'm getting settled right now. I'm going to be in St. Croix for about a few months. So it's been done, a little settling, been a little bit busy getting set up over here. This is Twitter. Twitter's trading basically at $44 and change. We're going to look at what's called a 44 call. Now, what does the 44 call give us to do? It's the right to purchase the stock at 44, right? So we're going to purchase the 44 call. And what I want to know is what, is the call option estimated to be worth if the underlying moves up or down $1? Okay, up or down $1. Now, can we figure this out? Okay, can we figure that portion out? In fact, you know what I'm going to do over here? I'm going to get crazy. I'm even going to pull up a calculator. Pulling up a calculator here, just so you can see where I'm coming at with this. All right, I'll minimize that for just a second, but you're going to see that in a moment. What I want you to understand is, what is this option right here going to be worth if Twitter moves up $1 or down $1? Let me ask you, can Twitter move $1 in a day? Can Twitter move $1 in a day? For those of you that are brand new, okay, maybe not. I don't know. You want to take a quick glance? All right, Twitter. Here, how ironic. Twitter moved $1 today. You know what's actually great? I took that screenshot a couple of weeks ago. Look at the price of Twitter. It was $44. Now it's $46. All Twitter basically does on a day-to-day basis, right? Chops around $1 here, chops around $1 there. It's $1, it's $1, it's $1, it's $1. Look, thing moves $1 almost every single day. So I thought this is a great example. And what I want you to be able to do is to understand this just a very, very simple concept. If you want to know what this option is worth, and that option right now is trading basically for around $1. Look at the option precisely, $1 above it, and the option, that's precisely $1 what? Below it. Now this option still has, 2 days remaining to expiration, meaning that I took this screenshot on a Wednesday. This thing has a Thursday and a Friday left, so you cannot lose the full $1. What you're doing here is called a strike price shift increment. What it basically means is if Twitter went up $1, the 44 calls, are going to act like the 43 calls are right now. Why? Because those options have moved $1 deeper into the money. And if the stock goes down $1, the 44 calls are going to be acting like what the 45 calls are acting like right now. So what are you going to make or lose? In this case, your $3 is worth then $1.79. So after commissions, after everything, what are you making if you're right? Let me clean this up for a second. What are you making if you're right? $1.03, is then worth $1.79. So if you're right in this first example, it looks, roundabout, and I'm going to change the color over here so it's a little bit easier to see. Roundabout, it looks like you're going to make, about 75 cents if you're right. What are you going to lose if you're wrong? Your $1.03 is going to be worth roughly about 50 cents. So what are you going to lose if you're wrong? Let's call it what? If you're going to be wrong in here, you will lose approximately 53 cents. Time out. Is that viable? So when I talk about viability, if you're right and the stock does move up $1 versus down $1, that's it. All I'm asking you, I'm not asking you to figure out your MACD and your Fibonacci and your Bollinger Band. I'm just saying, if the stock moves up $1, you make 75 cents. If the stock moves down $1, you're going to lose 53 cents. Good. Do that 100 times. Do it 100 times. Because as I said a moment ago in that slide, it's the law, of 100 trades. And the law of 100 trades, do you come out ahead? Because every time you're right, you're going to make 75 cents. And every time you're wrong, you're going to lose 53 cents. Now, I'm simplifying that. I'll tell you why I'm simplifying that. You realize that if you're right, you could technically make a lot more than 75 cents. And if you're wrong, you can just cut your losses short if you want to watch the market. If you don't, you get it. But what I want you to see, is this a favorable risk reward for somebody that would only be right 50% of the time? Is this a favorable risk reward for somebody that would only be right 50% of the time? And do you guys understand where I'm going with this? Okay, I'm not going to give you just one example. All right, every time I'm right, I make 75 cents. Every time I'm wrong, I lose what? 53 cents. You know what? Put transaction costs in there too. Make it 55 cents. There's edge in the strategy itself. There's edge in the strategy itself. You know, could I go look at Twitter right now? Sure. Okay. You want to go look at Twitter? Let's go look at Twitter. All right. I can open up all the different kinds of option chains over here. You know, one of the fun things about this, though, is, you know, I'm taking you to some depth over here. You still have to know which option to select. You still have to know which option to select. And, you know, it's not always like this one. It's not always this one. Okay. I'll tell you what. The bid offer spreads in here a little bit wide after the market closed. But here, let's just take a quick glance at a strategy. Quick glance at a strategy. See right here? That's trading for 94 cents. If the stock moves up a buck, that thing's going to be worth $1.70. So your 95 cents is going to be worth $1.70. So how much is that? Ironically, it's the exact same as our example. You're going to make 75 cents. If we're dead wrong, your 94 cents is going to be worth what? It's going to be worth right here, which is 45 cents. Ironically, you're going to lose 50 cents. Do you get it? You wanted a fresh example? There's a fresh example. There's a Twitter example. You can see it on your screen. But I'm going to tell you right now, should you use 2 days? You can go out 16 days too. You could actually get viability out in time as well. We'll cover that a little bit. All right. Next over here, an Intel example. Again, I'm going to start easy on you. I went from Twitter, which is a 40 some odd dollar stock, to Intel, which is some $50 stock. Now, again, I'm starting easy on you because I want to make sure that you're conceptualizing this the right way, right? That you see that we're going to purchase in this case. This is just an intraday trade. And right now I'm just using calls. I like to use puts, but hey, we're going to purchase the 52 call. What is the 52 call? And right there is your 52 call. But what's that call? First of all, it's trading at 45 cents. What's it going to be worth if Intel, okay, moves up or down $1? When? Today! All right? Well, that 45 cents is going to be worth what? About $1.23. But if you're dead wrong, that 45 cents is going to be worth about 11 cents. Is there viability to the risk reward? And this is where, again, if you're a little bit newer to this and you don't necessarily see it, you pull up your little trusted calculator over here and you come in there and you say, all right, so I'd make $1.23. All right, I paid 45 cents for it, yada, yada, yada. Okay, oops, swing and a miss. Okay, so I paid $1.23, subtract, okay, 0.45 equals 78 cents. So in this scenario, if I am right, I am going to make, okay, about 78 cents. Again, I could put commissions and everything in there. If I'm right, I'm going to make about 78 cents. If I'm wrong, my 45 cents, okay, is going to be worth 11 cents. Let's just round it, okay? Your 45 cents is going to be worth 10 cents. You're going to end up losing about, okay, 35 cents on this. Once again, in a 50-50 world, okay, does this work? Does that work? And if you can get the concept down, like if you see it, because this is where people like, they just, don't deer in a headlight on me right now, right? Listen, I don't care. There's almost 1,000 people logged in right now. I don't care. I just want to make sure that everybody that is logged in, you get it. Because I told you, this is not going to be follow the bouncing ball. This is not going to be red and green flashing arrows. This is going to be your ability to look at a screen with me and forget about even the screenshot. Forget it. Let's just go live. Okay? Go live. And that was a Twitter example. I just brought up Intel. Yeah, let's go live into Intel. Right? And I'll use like some of the shorter duration options in Intel. You can see I've got positions in here as well. I don't mind. Okay? I got positions in all kinds of good stuff. But in something like Intel, okay, again, option selection is everything. Here's a fun one. I'll tell you why this is actually a fun one, because if you there's one thing you get better at with time in this business, and I already see it. Here, this 53 call is currently trading for 80 cents. If I'm right, it's going to be worth what? $1.64. But if I'm wrong, it's going to be worth about 30 cents. So in this case, I'm basically going to double my money, make 80 cents, or I'm going to lose 50 cents. Get it? Like, think about that for a second from a risk reward. So you go out and you do 100 trades. Okay. And I just use this scenario because I don't want to tell you, your business. Just use this scenario. And in this exact scenario, every time, and I'm going to call this side heads and I'm going to call this side tails. You know why I'm calling it heads and tails? Because I literally want you to assume that you flipped a coin over here. I want you to think, okay, that this is 50-50. Because again, everybody in this business is, oh yeah, follow the bouncing bonds and MACDs, Fibonacci's, Bollinger Band. And listen, there's some great tools to make you right more often. But if you can't get this down, you're not going to succeed in this business. Heads, you're right. Tails, you're wrong. Every time it comes up heads, let's just round it. Your 80 cents becomes worth $1.64, right? So every time you're right, you're going to make 80 cents. But every time you're wrong, your 80 cents is going to be worth basically 30 cents. So you're going to lose about 50 cents. Let's go through. You're wrong, okay? You're wrong. You're wrong. You're wrong 3 times. You're right, okay? You're right. Time out right there. Here, you're wrong 3 times. You're right twice. Are you okay? After transaction costs and everything, right? This is $1.50. So you're actually losing here, what? About $1.50. You're taking $1.50 a loss. Over here, you still made $1.60. Okay. After transaction costs and everything, after 5 trials, you're what? You made 2, okay, out of 3 of them worked out. 2 out of 3, you still broken even. That ain't bad for 2 out of 3. And if you understand that piece of logic over here, you're way ahead of the game. And again, somebody said, I'm kind of starting to get it. I hope you guys get it because, again, this crap, it matters. Like, it matters. And people that understand this, like, don't run out tomorrow and, I'm going to try it out. Okay? You got to get some foundation behind it. All I'm trying to do is enunciate to you. All right. The last example I'm going to give you here is the spiders. And then we're going to go a little deeper. So here in the spiders, why do I like the spiders? Well, check this one out. This one has no time to expiration. 95 cents. I am going to risk the full 95 cents because if I'm wrong, the option's going to 0 because there's no time left. This option expires today. But if I'm right, see the spiders can move at least $2 a day. They can easily move $2 a day. The spiders can move $5 in a day recently. But let's say the spiders move $2 in a day. And if I'm right, my 337s, okay, are going to be worth what the 335s are trading for. So I'm risking 95 cents to be able to make like $1.35 in here. It's gold, Jerry, gold. Okay. That is how you want to be able to strategize. This is important stuff, right? It's important because I want you, again, to just keep thinking through that scenario. The law of 100 trades and 100 trades later. How are you directionally? If you tell me that you're right 70% of the time in this business, you still need this because you're just going to make more at that point. But you tell me, you know what? He's got a good point. I'm only right about half the time. Like, for those of you that are really into this business, especially on an intraday basis, some of you guys may have spreadsheets already built and you know how good you are. Or lack thereof, which is fine. Like, listen, I've been trading since, 1998, right? I got in this business a couple weeks before the fall of long-term capital management. This is my 22nd year as a full-time trader. Before that, I dabbled even through college. Again, I grew up around it. And this is like the first stuff that's instilled in you as an options trader. And it never seems to really permeate, okay, to, average people. And again, we could look at spiders. We could look at anything you want in here, right? Any product that you want. And you start looking at the spiders and like, it's not a lot of risk. You can go out and buy an option for, $100 here or $200 here, but it's about risk reward. And what I want you to get down is the implication of trade logic. In constructing an intraday trade, for your options, okay, it's the selection of it is imperative. In the previous examples, we could be right directionally less than 50% of the time, which is precisely what I showed you. I did 2 out of 3 and I still broke even, right? It could be right directionally less than 50% of the time and still come out ahead. And you got to ask, can your strategy do that? And I'm not picking on you. I just want you to understand it. Like, you got to sit here and say, yeah, I can do that. Or no, I can't do that. Right? I can't do that. And, when I do this, it's to exploit the weakness, right, that most people have. Think about the implications of selecting a strategy that can provide a degree of edge in the markets before we've even discussed direction of the markets. And that's what I mean by like long live trade logic. Now, with that, what our members are saying. Now, at TheoTrade, okay, we trade live each and every day in front of clientele. Every single day, okay? And you know what? This one comes on July 30th. All right, so it's a couple months ago. Neither here nor there. But I absolutely love, okay, this particular quote. By the way, Jamie G is just one of our clientele. And he said, I trade pretty small. I like the intraday options because chances, okay, are your losses will be small and your winners big. Okay. I have made 10 QQQ intraday trades the past few weeks. I lost 7 of them, but I'm profitable because the winners were huge. And I just absolutely love that particular quote for no other reason than the fact that, listen, there's a guy actually that's out there trading. He lost 7 out of 10. All right. That's pretty bad. You know why that's so bad? Like in July, the market was going straight up. You figure at some point he'd be like, I'm going to make this work, baby. I'm just going to get bullish today. But he didn't. He just kept doing bearish trades and bearish trades. But he loses 7 out of 10. But he was still profitable net. And that's what this business becomes. That's what this business is about. And that's what I want you to see. Now, in conjunction with that, directional bias. Now let's talk. I'm going to talk a little bit about directional bias because people want foresight. That's what they're always here for. Like, well, what do you think the market's going to do? What do you think the market's going to do? I am a quantitative trader. And what a quantitative trader means, right? I'm not going to look a lot at a MACD or a Fibonacci, right? I am a trader math geek. I grew up around trader math geeks, and they didn't call quants 20 years ago. They called us geeks, right? And by the way, geek, like two decades ago, geek was not an endearing term. Now, okay, geek is the new sexy. You call somebody geek, you're like, yeah, I like that, okay? Geeks apparently make hundreds of millions, if not billions of dollars. Look no further than any major tech company out there. You're like, really? Okay, that kid did that? I'm a quant. And any strategy I present has some mathematical value, some mathematical logic. It's always going to be based on probabilities and outcomes. Probabilities and outcomes. Quants do not typically rely on charts and studies, but rather probabilities, relationships, statistical edge. If you're not familiar with quants, don't worry. I'll go, over it throughout the presentation, okay, of why and how quantitative analysis will become your new best friend. So markets, they really speak volumes. They speak volumes. And when you look at this, trading for you needs to be about reading into relationships, okay? It's not so much about, what I think is going to go on. Reading market relationships can actually help construct a probability-based outcome on an intraday basis, okay? And this stuff speaks volumes. And when I start talking about it, people get lost. And here, what I'm saying is this. Most people that trade, okay, on an intraday basis are very, very myopic, all right? When I say myopic, again, I don't want to be negative over here, but are you maybe guilty of that? When I say myopic trading, everybody get what I'm saying here? Myopic traders are those, what they typically do is they focus, okay, all of their attention on one product. It's a stock, it's a future, or otherwise. They just focus all of their attention, okay, on one like aspect of the marketplace, and they fail to kind of see like greater of what's going on in the overall marketplace here. So again, there's a cure for this. And again, when I talk about like myopic trading here, you know what? I actually have a great example for you. Sorry, I'm moving. I have a sit-stand desk, and we're standing up because I'm getting angry here. All right, listen, myopic trading. This is a perfect example, like Microsoft, right? This is myopic trading. This is Microsoft, and Microsoft is just going straight up to the moon, Alice. Okay, and then turns around and the rest of the day did nothing but see some sell-side activity. You know what? Okay, forget this again. This screenshot. Forget this screenshot stuff. Let's go live. Okay, let's just go live over here. This is a here. Let's see Microsoft. Okay, now when I say myopic, you want to see myopic? Here's myopic. This is how the day started out. This is how the day started out at Microsoft. And what I mean by myopic is, if you were looking at this chart, this thing's about to break out to the upside. Legitimately, come on. It's breaking out to the upside. The volume's higher. I'll throw a MACD on there. Everything's all bullish, 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 bullish. Before you know it, you're all bought into it. And then what happens to you if you looked at the entire day? Like that was the high tick of the day. That big bullish breakout was the high tick of the day. The thing did nothing but slide the remainder of the trading day and finished demonstrably lower on the day. That's what I mean by like trading from a very myopic kind of angle. You know, by the way, there's a ton of products that look like that today. Amazon, look at Amazon today. You want to get torn apart? Amazon's having a breakout day, and did nothing after that but fall flat on its face. I mean, Amazon unto itself is what took a lot of the marketplace down today. But that's what I mean by myopic trading. And that's not what I'm about. I'm about probability-based outcomes. Even intraday trading, okay, is based on probability. We're going to look at select products. Okay, and by looking at a select number of products over here, right? By looking at a select number of products, we're going to try to create, okay, a higher probability outcome for intraday trades. So let's review a couple products. Now, what I'm about to show you here, just listen, hang on for a second. This is going to get scary. You ready? This is an intraday checklist. The S&P 500 and the NASDAQ and bonds and volatility futures, an advanced decline line with quantics and monsters of technology and financial sector and oh my! Okay, listen, before I even show you what any of this means, before I show you what any of it means, here's what you got to know. Okay, if, okay, you know the correct products to watch and what to look for, then you can create a probability-based outcome, okay, with an incredibly viable intraday setup. You guys want to see this? You want to see it off here or you want to see it a little bit live? You tell me, okay? Because most people, the first time they see this, they don't really get it, but I'm going to show you exactly what it is. All right. So what do you think? Go live? Go live. All right. Hey, listen, I'm listening to everybody in the live chat, okay? Here we go. So what we're going to do is we're going to pull up the S&P futures. Now, in no way, shape, or form am I implying that you're going to look at S&P futures. I don't care. I don't care whether you look at the futures or not. What I wanted to show you this morning, okay, what I wanted to show you, and I'm going to begin with, number one, quantics. Quantics is critical. This is actually this morning. The marketplace started just to slip a little bit here. But look, the ticks are absolutely hideous. They're breaking to the downside, okay, especially like the NASDAQ ticks, all right? The S&P ticks, they're breaking to the downside in a big way. That's actually what all these little white dots mean. The ticks are breaking down, okay? As the ticks are breaking down, right, the rest of the marketplace starts to kind of sell off listlessly. The point that I want to make with this, look at my left side bar for just a second. This is what we call the left side bar. Now, every product, okay, every product here has some value to it. When I say some value to it, all I want you to think about in respect to what I'm about to do is we're going to create a probability-based outcome. Let's assume that we're trying to create a probability-based outcome based on this right here, right now, okay? We're going to look, let's say, at 10 different things. We're going to look at 10 different things. We'll look at the S&P futures, which are right here. We're going to look at the NASDAQ. We're going to look at the volatility, which is right here, specifically the volatility futures. Okay, we're going to look at the bonds. Okay, then we're actually going to go down the list. We're even going to look and incorporate maybe a little bit of dollar in there. And we're going to look at the financials. We're going to look at what we term the monsters of tech. And as you start to go down the list, and I'll just make a quick point. If 7 out of 10 items, okay, are bearish, then we would literally take a bearish position at some point in the day. Does that make sense? That's how simplistic I'm going to make it. Initially, that's how simplistic, because that's all that we are going to do. We're actually going to look through, okay, the same 10 things, the same 10 products every single day. We're going to go check. Okay, that's bearish. Check. This is bearish. Check. That's absolutely bearish. You know, check, check, check. And bearish, 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 bearish. 7 out of 10. That gives us about a 70% probability of continuing this particular bearish move. But you're going to get days where the marketplace is bullish and yet still projecting a bearish move taking out, and vice versa. There's days where the marketplace is selling off huge and all of a sudden you're like, that doesn't make sense. These are really bullish indications for this. They can provide a wonderful, wonderful intraday setup. Okay, you have to know what products to look at, and you have to know how to kind of sift through and quickly create a probability-based model. And it's not a lot. I'm not asking you to look at a ton of things. I am asking you to look at like 10 different products. When you get better, that'll go up as high as maybe 12 products. And as you go through, you just have this little checklist. Okay, and on those checklists, you're like, okay, once you're up to 12, you have 9 out of 12. So if 9 out of 12 products, for instance, is bullish, what kind of position do you think you're going to take on an intraday basis? Okay, think about it for a second. Right? Does that make sense? And again, these quantics are going to play a role because they're just one of the other indicators. Everything is quantitative. When I say quantitative, everything is about deriving a probability. I'm not going to tell you. You know, oh, that works all the time. There's times where, you know, the marketplace is up and up big, and you're like, I'm bullish, I'm bullish, I'm bullish, I'm bullish, and everything checks off. 10 out of 10 is bullish. And then the administration tweets and the marketplace sells off big. And that's when you turn around and you say, thank heavens I used options. Thank heavens I am defined risk. Because you still have to be able to survive, okay, in a world gone completely mad. Like, volatility is a very good thing. It is a very good thing. Most people don't view it that way, right? But again, that's what we mean by a probability-based outcome. If you know the correct products to watch, what to look for, you just go through this checklist and this perfect probability-based outcome, okay, comes into play. That is specifically what I do to create directional bias on an intraday basis. Listen, the key factors to intraday success. Number one, you got to employ a viable trade logic as displayed with the use of options, right? That's where I was doing the 50-50 example. You know, oh, if I'm right, I'm going to make 75 cents, but if I'm wrong, I'm only going to lose 50 cents. That's gold, okay? Number two, we're going to use a couple of quantitative indicators to assist you in creating a higher probability intraday setup. And again, do I put a lot of weight into quantitative indicators? Absolutely, unequivocally, yes. Okay, but I also want you to know at the same time, that is not the preeminent, okay, portion of my trade. I'll get you so good with the use of options, okay, that trade logic, right, it overpowers everything, and that the quantitative indicators are very much secondary. And they're a great tool, and they're a phenomenal tool, but I'll get you so good at option selection that you're going to feel like you're like, I was wrong, and I'm okay, and I was wrong again, but I'm okay, right? And that's what this comes to, is the right trade logic coupled with our quantitative approach to directional bias, what you've been looking for. And that's something, okay, well, I'm going to try to answer for you. So what I'm going to do right now is I'm going to show you, okay, quite the history of trades. One of the things I like to do here is tell you this. I don't want to show you, okay, I don't want to show you trades that are being done, right? When I say trades are being done, trades that are being done just the last couple of weeks or the last couple of days. I want to show you a much, much more extensive, okay, trade history, okay, unto which you can then understand that this isn't around, you know, today, tomorrow. This has been around, again, literally for years. And it's a really big portion of what I do on an intraday basis. Now, if you guys are taking a look at your screen right now, I'm all the way back, okay, in the May time frame. Again, I'm back in the May time frame. And what I'm going to do is take you on a little tour, all right, of, well, quite a few here intraday, again, intraday trades. So once again, everybody good? Everybody see what I'm looking at right now? Everybody kind of comfortable with the with some of the logic in here? Because now you're actually going to see some of this in work. Now, I'm actually going to show you a smattering, again, a smattering of trades from quite a long period in time, simply so you just get a feel for more than just, trades that were done in October or trades that were done in September. I could show you, dozens of trades just the last couple of weeks, but I want to show you a degree of consistency in here. With that, here we go. May 1st. So I'm out on the exact same day. Just to kind of give you a little bit of a feel. This is the exact time and day. Let me actually change the color over here, make it a little easier to see. Okay, that's the exact time and day I executed in. This is the exact time and day I executed out. This is buy to open, okay, sell to close. Buy to open, sell to close. You're actually looking specifically at Thinkorswim right now, but you're also going to see a couple trades that were done on Tastyworks. Here's a trade that I put on for $1.98. Now, if I did one contract, for one contract, it's every $198 I invested, I got back $475. That's 140% return. Okay, so is 140% return good? Don't worry about that. We're going to get there. That's where like everybody's like, oh, is it a good return? Okay, you be the judge of that, because you're going to see, again, a smattering of different trades. And you're going to start to see a little bit of a pattern in here as well. So this is assuming, all right? This is assuming, oh, by the way, yes. So you guys know, this is Arizona time, okay? This happens to be, these trades were done on the Pacific time zone. Actually, you're going to see a couple of trades that were done this week that I'm actually going to switch to Eastern time. Again, for those of you that joined maybe a little bit late, I've been residing in Scottsdale, Arizona for quite some time. At least for the next couple of months, I am going to be residing in St. Croix, U.S. Virgin Islands, in a little bit of a trader enclave over here. It's a bunch of traders I've known most of my life. All right, so onward and upward over here. So Facebook, you can see I turned about 140% return. That's back in May. Okay, moving on here. I'll just go to May 11th. May 11th. This is Intel. Okay, here's actually a one that I kind of call this a little bit of a punt. I want to show you. People always go, "Are you going to show me only good trades?" No, I'm going to show you crap trades too. I don't care. Okay, listen, $1.83. Out at 205. Every $183 I invested, I got back 205. Now, you don't have to go out and do one contract. You could do 10 contracts. So for $1,830 you invested, you got back what? 2,050. Not exactly killing it. It's a 12% return, but that's not bad for what I term a punt. Okay, what's a punt? Basically, I knew I wasn't going to make anything, so I closed it and was pretty happy with what I closed it for. All right, next one. This is the QQQ. Intraday. Okay, so this one, I jumped forward all the way out to July. I'm just giving you, again, there's different volatilities, different times over here. This one's actually put on July 7th, taken off obviously July 7th. That one's put on 4 minutes after the cash open. 6:34, exactly for 4 minutes after the cash open. This one right here is actually closed, 20 minutes before the close. So the reason I'm actually detailing the time in here is, as I told you, you don't have to be glued to your screen. Every $378 I invested, I got back $594. It's a 57% return. Okay, so moving right along over here. The next trade over here is the spiders. So I'm actually jumping now into the June time frame. In the spiders, I actually remember this day. I had absolutely no time this particular day. I put the trade on. An hour to go to the close. I actually closed the trade. By the way, the spiders are open 15 minutes after the cash close. This one was actually closed 2 minutes after the cash close. I didn't exactly kill it over here, but for, this is 1 hour of my time. Every $303 I invested, I got back $365. It's a 20% return. And again, do as many contracts as you want, right? So I could have done $3,000 to get back $3,650. And I don't talk that much about size, because when I talk about size, I mean, do I do 10 contracts? Sure. Okay. Sometimes I do more, sometimes I do less. Depends on the allocation, what I'm actually willing to risk on that given day. So again, this is the opening and closing. That's a whopping hour of my time that day. Here, this is actually a SPY intraday trade example where I went out and I actually paid, 62 cents. They expired worthless. So what did I do? I took a loss. Took 100% loss on this one. Okay. Is that okay with you guys? Because everybody, he's never going to show a losing trade. Of course I'm going to show a losing trade. I'm going to show losing trades. I'm going to show winning trades. I'm going to show punts in here, right? Okay. Somebody asked a great question. Okay. The number of contracts, does it matter? Actually, it doesn't. Because everybody pays now about the same commissions. Whether you trade 100 contracts, whether you trade one contract, we all kind of pay the same commissions, which is sweet. It doesn't change anything anymore. It used to. It used to make a difference. Like you're like, oh, I have to trade big. I had to trade big because the commissions made me trade big. You're not in that scenario anymore. You're just not. Okay. It's freaking utopia out there. So here, July 7th out, July 7th. Look, this one was actually put on in the first 20 minutes, okay, and it was closed. This thing was closed 8 minutes before the cash close. So again, I didn't monitor the position throughout the course of the day. Every $237 I invested, I got back, what? Apologize, this should say 387. I got back 387, 63% return. Look, 237, close this one for 387. That one's not bad, okay? Take it for what it's worth. Moving right along. The next one, no. What our members are saying. Jamie G, okay, Diamond, you're amazing. Ali, I made $1,458 today with the techniques I learned at TheoTrade. Pablo, thanks. Nice profits. Have a great weekend. Here, this is actually the SPY. Now, okay, this is not something you're going to do on a day-to-day basis, but this is actually, you'll see a couple of these trades in here. Oh, probably a few times a month, you're actually going to hit one out of the ballpark. Here's one where I actually paid literally 88 cents for a 322 put. This thing was actually put on in the first about hour and a half of the day. It was closed right before the close. I returned every 88 cents or every $88 I invested, I got back $717, 715% return inside of a day. That was actually a big sell-off that particular day. I've told you volatility is a very, very good thing. But on this particular trade, people ask how many contracts do you do? Okay, listen, on this one, I had 10 contracts on it, but it's neither here nor there. 10 contracts, so I had $880 at risk, turned $7,000, okay, $170. It's not... you got to be comfortable, though, with that risk because it's all or nothing. You're going to lose that 88 cents if you're wrong over here. But you have to understand, that's okay. That's exactly what I wanted to explain a little bit earlier, is that is okay. It's okay to say like, oh, I lost $800, and tomorrow I lost $800, and the next day I lost $800. And on the third or fourth day, you make $700-800, okay, off the trade. And you got to get that methodology down, that logic down. Again, what our members are saying over here, and just to show you, all of these trades were done live, right? Eugene, woohoo, thanks, Don. SRK, absolute home run, nice. Okay, Lexus, plan your trade your plan, stay in the game. Get your Don dollars here. But Haram did even better. He actually paid 51 cents. He posted his actual trades in here, paid 51 cents and closed it for 730. Okay, I mean, listen, everybody in here is trading their own capital, okay? And I love it. People actually post their fills in here. By the way, they're especially enthused when they've actually done better than I have on a given day, all right? The next one over here, I'm jumping forward a little bit in time, make stuff a little bit more recent here. This is $4.62, okay? For every $462, I got back $553. This is a 20% return. I'm showing you a couple of trades that are just punts, but they're consistent, okay? And the consistency is what's key in here. The next one over here, this is actually one of the first ones that you're going to see on the Tastyworks platform. This is another one that was an absolute grand slam home run. Now, for those of you, if you've never seen the Tastyworks platform, here's my fill, okay? It's $1.64, okay? That is the exact fill. This particular trade in here, all right, I filled at 6:37 a.m. I closed it. Again, take a quick glance. Closed it in here. What? Shortly thereafter. $1.64, $12.95 credit. It's a home run, an absolute home run for 1 hour in terms of the trade. And that was it, okay? Every $164 I invested, I got back $1,295. It's a 690% return. I was quite enthused with that particular trade in there, simply because this is an hour, literally an hour of the given day. And you can see what's kind of cool on Tasty. This one actually shows you in both Pacific time and Eastern time. All right, onward and upward. This one's on Microsoft. Look, if you're into stock, this is actually a stock trade. I actually shorted Microsoft at 208, bought it back at 205. Okay, this is an intraday trade, lasted a couple of hours, onward and upward. This is QQQ. Okay, and the QQQ, once again, this is a little bit more recent. Okay, when I say it's a little bit more recent, again, I'm trading more and more on Tasty. This is actually done September 17th. Okay, I actually entered here at 321, closed at $4. All right, so every $321 I invested, I got back 400. It's a 25% return. Again, you're seeing days that aren't necessarily stellar, but you're seeing days, after day after day after day after consistency over here. Okay, here's another one that actually filled. Again, this is a Tasty one. It's called Tastyworks, the brokerage platform. And this is a $1.07 debit, turning a $2 credit. This one was actually done right here. Okay, if you want to see the exact date and time, again, right here's the date and time, September 30th. Okay, the exact entry, the exact exit. This is one that's put on about 40 minutes after the cash opened, closed in the last hour. Every $107 I invested, I got back 200. It's an 87% return. Okay, continuing kind of on our line of some of the live trades in here. This is QQQ. Now, okay, just so you guys know, you'll actually see me, all right, September 30th, and then I jump forward. I jump forward to the 12th. I do apologize. I was actually traveling pretty extensively last week. I traveled here to St. Croix just over a week ago. And I've been getting set up, getting comfortable, actually working with a couple of individuals down here to get a little bit more comfortable with the internet and so forth. But I started firing trades off again quite readily this week. I'm all set up with my home office. Like literally, I moved down here for a couple of weeks and brought, I have a wife and 3 kids, so it's been a little bit to get set up over here. But this is a trade I obviously did on Monday. Okay, and on Monday, execution times. Obviously now this is Eastern time. Every $784 I invested, I got back 958. This is a 22% return. Again, I'm not showing you just, blistering, unbelievable trades over here, but I'm showing you consistency. And that's one of the keys to it. And last but not least over here, this is actually a trade that I did today. Okay, so again, as I said, I started trading again quite heavily this week. And again, this is a trade that when I say I did today, it's, 9:55 today, closed at 2:32. This is actually the spiders. Again, the spider 351 puts. I put them on for a 68-cent debit, closed it for a $3.51 credit. Every $68 I invested, I got back $351. It's a 416% return. And I caught every ounce of that little bit of a down move inside of the S&Ps today. Specifically, though, okay, I traded in the spider today. When I say I caught that every bit of that down move, I put the trade on really early on in the session today. Okay, the exact fill time, and again, I want to reiterate over here, I like to show pretty much everything. The exact fill time is 9:55. Now listen, do I know anything about market direction? No. Okay, but I put that trade on at 9:55. Did I catch the high of the market? No, but I got really, really close. So at 9:55, in this minute, I put the trade on. The marketplace sold off the remainder of the day. And I'll tell you what actually tipped me off. At the very peak of today's trading session, volatility was actually taking off early this morning. I wanted to show you that because people are like, why did you put that trade on? Volatility was starting to actually come up as risk was starting to actually permeate into the marketplace. And it was good for a 416% return if you actually saw that going on. Okay. Again, what some of our members are saying, you won't find a more supportive and a more profitable room anywhere in the retail business. Okay. Ali, okay, said, Don, help me pay for a year of TheoTrade subscription with QQQ. Daniel Fabian, hey guys, new member here. Been lurking in the chat for about a month. Was short the SPY. TheoTrade is the only membership that I've ever had that pays for itself and then some. I mean, listen, this is a great time. It's a great time. What time to learn a better skill set, especially on an intraday basis. There's volatility. A lot of people are working from home. Some people are still quarantined right now. This is a great way, though, to spend some time. And you do have to learn a little bit over here. If you're working part-time, if you're working from home, if you have the ability to look at a screen periodically, okay, this is what you want to be doing. This is what you want to be doing. By the way, I wanted to show you what's possible also in some extreme volatility. Okay. And it's some extreme volatility. And I'm just going to give you a quick rundown over here. As I said, I kind of show a little bit of everything from my accounts. And this is an IRA, and this is actually back, okay, February 23rd. My IRA was worth $211,000, 929. Okay. This is a quick 5-day run. This is what we call a 5-day net liquidating value. The IRA by the end of that week was actually worth $248,000. Okay. And you kind of go month by month, and I'm just giving you a glimpse in time over here. Okay. As of the end of September, okay, the IRA is now worth $621,000 and change. And that's, again, I take a screenshot today. And again, I like to show, accounts. It's, it's something that I think benefits everybody to actually see, day-to-day P&L. Okay. Again, $88,000. And this is everything I'm doing on Thinkorswim. Most of my trades over at Tasty, and again, I've got different portfolios, but there's two primary accounts here. One of them today I was up $2,500 in. Okay. The other primary account I was actually up roughly $2,500 in. Okay. If I total the accounts together, again, I have about $88,000 in margin, making about $5,100 today. And I wanted to show that because, again, I think a lot of people that aren't, comfortable necessarily showing account progression over here. And I started this, and I did this intentionally because this is kind of when coronavirus kind of kicked off. The volatility has been a good thing. It's not been a negative. It's been a positive, and it's not about some rally. Most of the trades you saw me do were bearish. Okay, I like to trade some bearish trades over there. Why? Because when you're right, you make an absolute grand slam home run. And if you don't have a huge amount of time, listen, the trades that I showed today were displayed live here at TheoTrade. The trade results, okay, we're showing it's perfect for part-timers. Like, I just want you to know that intraday trades, it doesn't have to be sitting in front of the computer all day long. Okay, I was talking about earlier today, and I said, listen, I could not sit in front of my computer today. I executed a trade. I left. Again, I have a family here. My family just arrived this past weekend in St. Croix, and we're still running around, getting everybody situated, trying to find the right things. I'm on a small island. It's not exactly easy. So I didn't monitor the trade today. And I just closed the trade about an hour before the cash close. So listen, even a fraction of your time is going to be enough to see some results out of here. You don't have to be glued to the screen, right? So some of the characteristics, though, of intraday options trading, and some of these characteristics, this is what this business is about, okay? Like the attributes of trading intraday options with quant analysis are just undeniable. I mean, what do you have? You have minimal capital exposure. There's one trade in there I had for $88. Today, what did I have? $68 at risk. I literally had $68 at risk today, right? Offer weekly options expiration. The spiders have a Monday, a Wednesday, a Friday expiration. You have viable risk reward when used properly. And we showed you that for that 50 scenario. Okay. Risk is limited to precisely your comfort level. Like, don't tell me you got in too deep. Go out today and do a trade for $68. That's it. That was my risk today. $68. If that's a comfortable number for you, then walk away if it doesn't work out. It's okay. Not every trade's going to work out. I'm telling you that right now, right? That's why I brought you through that example, right? There's no need for stop orders. We don't need stops. You don't need stops, okay? Rest assured that you're going to be defined risk. Can be traded in your IRA. The trade I showed today was done in my IRA. Avoids anything to do with futures contracts, which really intimidates a lot of people, okay? Trades need not be continually monitored. If you're comfortable with the risk, you don't have to monitor it throughout the course of the day. Okay? Trader can produce returns far beyond the max risk in any given position. And this is an excellent tool, though, for those seeking for returns to build a smaller account, but also those of you, or if you're looking for income style trading, if you're willing to spend a little bit of time on an intraday, basis, this is going to be for you. Listen, you got to build these, though. And please do not let options intimidate you. I'm showing you a trade down below over here. This trade down below is being done for a 96-cent debit. Okay. But you got to understand a little bit about options. And even those of you that some of you guys have experience in options, you still don't fully interpret which option to select okay, and how to correctly use some of these things. I always say this about options, but options are going to be the quickest, the fastest, the safest, the easiest way to get where you want to go in the marketplace, okay? But you have to learn how to use these options, okay, and use them correctly. Because options, the quickest, fastest, safest, easiest way. But like, you know, a chainsaw, if you were going to cut down a major tree, use a chainsaw. But if you've never used a chainsaw before, you're going to lop off an arm. You're going to lop off a couple of fingers. And options are the same thing, okay? You've got to learn how to use, okay, these things correctly. And that is everything to do with option selection. Listen, you can trade intraday options, right? You can do this. Maybe you don't have a lot of options experience. Don't even worry about it, okay? You're going to need these strategies for the foreseeable market future. Because if you think this volatility is going away, I'm going to tell you right now, I told people this the second the onset of the coronavirus and they started kicking on all types of quantitative easing and so forth. People, the can of volatility is opened. Fiscal stimulus, Fed stimulus, okay? They're stimulating stimulus, an election going on. It just keeps getting better in terms of volatility, right? Listen, we can show you how and when to place these trades in a matter of a few hours. Because what we do here at TheoTrade is we create detailed recipes for every trading strategy, including intraday options with quantitative analysis. And when I talk about, you know, like a trading recipe, I'm talking about like literally like if you were going to bake a cake. You wouldn't bake a cake without a recipe. If you did not know how to bake a cake, some people have baked a cake 20 times. You bake a cake 20 times, you probably already know how to do it. The same thing is true of trading. We develop a recipe, a checklist, okay? And most people, they don't have that guidance. They don't have something to be able to follow. When I talk about this, like this is what you need to know to successfully enter and exit intraday option strategies. What makes a viable intraday options candidate? Like what's a good candidate? Should I use the spiders? You saw me use the QQQ. Why did I use Intel? I used Intel in one of those examples. Facebook. Why not Google? Why not Amazon? You didn't see Tesla in there, did you? People, oh, I love Tesla. You see any of the volatility products? Oh, no. You can't do that. You got to know precisely what makes a viable intraday options candidate. Because what volatility should I seek out? As I said a second ago, you use Tesla, okay? You want to use some Tesla? Good luck to you. All right? I'm dead serious about that. Use something like Tesla, you're already dead. You just don't know it. You don't know it. There's too much volatility. Okay? The volatility exposure alone is going to put you behind the eight ball. Not going to be good. Right? What options expiration do I select? That sounds easy enough. I'm going to do the shortest thing. Listen. Okay? Here's the spiders. The spiders. The mother of all products. I'm telling you right now, the spiders they're a good candidate. Do I do this one or 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 this one? Or if you actually understand this business a little bit better, why use the spiders at all? Why not come in here and use literally the mother of all products? The SPX, people. Check out the SPX because look at the big SPX. You know you have a Wednesday expiration. You have 2 Friday expirations. You literally have an AM Friday, a PM Friday. You have a Monday, a Wednesday, a Friday. You have an end of month. Look how many expirations on here. You have to know, okay, how to zero in on what expiration, on what volatility. You have to know what should be the delta of the option that you buy. And I'm going to tell you something about the delta of the option you buy. First of all, there's people that have no idea what delta is. Delta, the rate of change of the option for every dollar increment move in the stock. But you know what? That's not what it's about in this case. The delta is actually going to give you the right probability. And we're going to give you the right probability in every single trade. So we're going to give you the right delta to trade. But you have to know how many days to expiration. If you're 3 days before expiration, you use this delta. If you're 4 days prior to expiration, use this delta. If you're 1 day prior to expiration, use this delta. There's a sliding scale for this stuff, right? Okay. What market factors do I look at before entering into an intraday options position? That's the quantitative analysis portion. What do I use Quantix for? Okay. Can I do this in an IRA? Of course you can. I just showed you my IRA account. Again, the accounts that I brought up over here a moment ago, okay, the IRA, that's my IRA right here. Okay. It's IRA for better, for worse. It is an IRA. And again, there's your my margin requirement in there. It's a standard regulation, Reg T margin requirement. It's actually inside of an IRA, so it's similar to a cash account. Here's actually the margin. This is a portfolio margin account. So you can absolutely do any of these trades in a retirement account. Okay. How do I build the trade? Sounds easy enough, but like when you go out, you physically have to be able to build the trade. When do I put it on? When do I execute it? How much do I pay for it? What's the right amount of risk for me? Okay, let me show you what we do here at TheoTrade. We create recipes in trading. Okay, would you like to learn how to create consistent intraday strategies and setups the right way? Let's discuss some of this criteria. Okay, trading, you're going to find this out one way or another, but trading is all about answering the what ifs, right? And that means what might be a good stock or ETF candidate? What's the correct options expiration cycle? How much capital I commit? What strike price options do I buy? How many do I buy? What about the day trading margin restriction? By the way, you can circumnavigate that completely. You never have to worry about the day trading margin restriction. Again, I spent 20 years in the brokerage business. Okay, we know what we're talking about here. And growing a small account, what should my allocation be? We have those answers. That's what we do here at TheoTrade. We build recipes with definitive criteria, literally checklists for each strategy and each unique variable that you're going to encounter. When I start talking about checklists, what the logic of the checklist is actually based, okay, on, for instance, if you were going to be a pilot. You're going to be a pilot and you're going to fly like a 747 or a Boeing 737 MAX. If those things ever fly again. But if you're actually going to fly an aircraft, you hop into the aircraft, put the key in the ignition and hit the gas and go. It doesn't work that way. Everything you do in those aircraft are checklists, and very detailed checklists where you go in there and you actually make sure, pre-flight checklists that you're getting in, okay, correctly. Then once you're ultimately in flight, they've got checklists for everything. Something goes wrong, they know exactly how to react. What we've actually built here at TheoTrade is just that. We built very definitive criteria. We built flowchart is a checklist, and actually as you go into the trade, you're going check, 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 quantitative analysis, check, 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 getting the right probability, the right option. We give you all of that. And then we have to give you, once you're in the trade, what kind of variables can you encounter? When I say variables, what if the stock goes up? What if the stock goes down? I mean, listen, TheoTrade is the answer to your questions. We'll give you the right probability for the trade. How many option contracts do I trade for my account size? When do I close my intraday trade? What if the stock sells off big? What's the correct return for the strategy? What if we rally massively? Can I fix a losing trade? It's about what? How, when, why, at what price? People, it is just the beginning of the variables that you're going to face while trading options on an intraday basis. Okay? You can read about what an option is. Everybody can. You can Google right now. Okay? 20,000 pages will come up if you Google what an option is. Maybe even know how to build an intraday options trade. What you need though, and what people come to TheoTrade for, is not to learn what an option is. Yes, we have unbelievable and detailed courses to teach you what an option is. But what people really come here for is the recipe for success. 20 plus years of trading experience. That's just me. And TheoTrade is not like the one-trick pony over here. TheoTrade is not just Don Kaufman. We have 7 other full-time instructors here, many of which you will know by name. I'll go through them. Okay, but this piece of criteria, this class, okay, this comes from me. 20 plus years of trading experience. I had access to client order flow for 15 years. I've viewed and studied millions of accounts. I know what works for retail traders. You're a retail trader. I ran education for 15 years, okay, at Thinkorswim and TD Ameritrade, which at the time had the largest options order flow in the entire industry. You're going to learn that criteria is your recipe for success. And the following strategy and the corresponding criteria requires the utmost attention to detail. We spent years fine-tuning this trade setup and criteria. When you approach the section on criteria, you follow the steps to build a trade. We have a full-blown 4-hour course available immediately with 24/7 access. It's called Consistent Intraday Strategies and Setups. Okay, I am the instructor for that. Now the class, it's already ready. It's what we call in the can. And we do that because we've actually gone through, we've edited it, we've cleaned it up. Okay, the class slide deck, that includes all of that entry and the exit criteria, the checklists, they're available immediately. Okay. And one of the other things we like to do this, like this class, you can watch it tonight. The class it's available immediately. You can download the slide deck tonight, but the course is archived and we'll give you 24/7 access. But we don't just have like, it's a TheoTrade website. We also have TheoTrade mobile for iOS and Android. So you can put this on an iPad. You can put this on your phone. You can download it onto your phone, okay? Or, different tablet device. And you can even watch it when you're offline, okay? The class itself, right, is $497. However, we have a phenomenal number of bonuses and a deal for you this evening. So before I go any further, I want to discuss it because, listen, a lot of people come out tonight, okay, and they've been to umpteen different, free webinars. They've been to umpteen things that they've already paid for, okay? People have paid, okay, for literally dozens and dozens and dozens of classes. I want you to know right now, before I go any further, because I think this is one of the more important things to discuss, right? You're not coming to TheoTrade and purchasing one class. We don't do that here, okay? You come to TheoTrade because you want everything. You want everything to learn, okay, how to invest, how to trade, okay? You want what? Trade, suggestions, trade ideas. We text you those out. You want somebody to be able to email, okay, for support. We do that. And it's all going to be included, okay, at one price. And I'm going to tell you right now, the consistent intraday strategies and setups, okay, that class is just on top of, that class is the key, but you need everything else and you need support. What I'm telling you is we don't go out at TheoTrade and sell an individual class anymore. We're done with that. Everybody else out there, they go out there, they sell a class for $500, right? And people know exactly what I'm talking about, okay? Somebody go out there and they sell a class for $500, and then they actually sell you an indicator for $500, but then you have to take a class to learn how to use the indicator for $500. And then before you know it, the cycle starts all over again. Then you charge you another $500 for a new class and another indicator for $500. And then before you know it, you have to pay $500. We don't do that here, okay? Because it's just not right. We're going to give you everything to support you in every way, shape, or form. And I'll tell you right now, we're going to do better than $497, okay? So sit down, sit back for a second, because I also want to teach you how we're going to support you. We do not give you a class and give you a pat on the tushy and say, you go ahead and trade, okay? That's not what we do here at TheoTrade. We are vast departure in this industry. Now, this class, consistent intraday strategies and setups. Let me get to it. I'm going to show you the course curriculum, and then we're actually going to jump into what the bonuses are tonight, and specifically what the overall cost is. Okay? Consistent intraday strategies and setups. This is the curriculum. How to create, and again, I just want to detail this for a second. Okay? How to create intraday trades that put probabilities on your side, so you'll always minimize your risk and maximize return. Second thing here, how to analyze the market so you can read and anticipate direction. That's the quantitative analysis, okay? The option setup with detailed, the step-by-step entry and exit criteria that's perfect for intraday traders. How the market provides predictable or manipulated ranges. You're going to learn a little bit about expected move here. The little-known market insights into what drives markets to move in one direction. So you're going to learn about order flow and what actually drives flow, okay? The tools and strategies for analyzing, okay, market conditions so you can trade with confidence. This also has a lot to do with expected move and how to minimize your risk, okay, and maximize returns really like never before. By the way, I'm not done. This is a fairly long class. How you can generate returns intraday with a small account or retirement account with minimal options experience. And again, we'll even talk about circumnavigating the day trading margin restrictions, which stocks and indices make the best candidates for intraday, what strikes, okay, what expiration, what volatility, and what probability, okay, are you supposed to go after in each one of these trades, when to open and when's the best time to close your intraday trades, okay, what market correlations to watch intraday so you can manage your swing or long-term investments. Why intraday trading, okay, does not mean that you need to be glued to your screen all day. And again, what best times are these setups for intraday trading, perfect for traders who cannot necessarily watch screens throughout the course of the day. Again, this is a pretty full-on class, right? Again, what our members are saying, this one actually comes from Ken. It was August 3rd. He said, woohoo, thank you, Dom. Okay, I'm never sure, okay, of trades that are new to me, that I structure myself. This is great to hear. This is actually Ken and I going back and forth, and I did black out his last name over here. Ken and I going back and forth, talking about a specific trade he was looking into, but not to brag. But this is due to you and your magnificent team. I am up $1.67 million in profit. Yes, I'm going to pull a big hunk of this out, okay, of my and my wife's accounts, and plus I'll give my granddaughter $50,000 to work, okay, on her master's degree, thanks to all of you, okay. I'll let you know how this trade goes. I need to check the chart on the Japanese ETF. Thank you again, okay. The Blank family. Listen, you want a bonus. And as I said a moment ago, at TheoTrade, we go beyond one class or one indicator. Like, we get it. Like, you want everything. You want to invest. You want it at one place, at one price, everything to be able to trade and not be nickel and dimed, okay? The first bonus tonight, we give you access, and I'll just make this totally clear. We give you access to 97 trading classes. Now, I know when people hear, it's totally overkill. 97 trading classes from day one. Basically, what I'm telling you, we give you access to every class that we've ever done here at TheoTrade. We launched TheoTrade, okay, in 2016. Like, literally January of 2016, we launched TheoTrade. And we've done 97 trading classes at TheoTrade. From day one, we give you access to every single class, okay, that we've done, which of course it includes consistent intraday strategies and setups. But don't stop there. We also give you the guide to small account growth with in-out spreads. Okay, surviving and thriving in extreme volatility back spreads. Okay, here's the in-out spreads course, probably the most prolific class we've ever done. Growing a small account, collect income being short, the next big short, the risk twist spreads, RTS spreads, huge. Iron condor, selling premium, minimizing risk. There's covered calls. If you're mom and pop and just want to collect a little extra income, essential skills for consistency in trading, pairs trading, top 10 skills for growing a small account. People, I'm just hitting a smattering of the courses. If we went out there and we charged $100 for each course, you're already up to like $10,000 in classes alone. We give you that, okay, right here tonight. We give you access to every single class that we've done. I'm not done yet. That's the first bonus. By the way, I didn't do all 97 classes. Our instructors here are as follows. Jeff Bierman, CMT. By the way, he's also known as Professor Bierman around here. Jeff is also a professor of finance, okay, at Loyola in Chicago. So you can pay $42,000 to listen to Jeff at Loyola, which a ton of people have done, or you can actually grab him here at TheoTrade. He's an analyst, a trader. He's also the former chief market technician for TD Ameritrade. If you've ever been on the Thinkorswim platform, okay, Jeff built a huge amount of the charts for Thinkorswim, huge amount of the charts, okay? So Jeff was heavily involved in Thinkorswim charts. He actually worked specifically in my group at Thinkorswim and TD Ameritrade. So I pulled Jeff from TD Ameritrade when I left. Next in the docket here, Matt Williamson. He's our market neutral. He's a premium selling options strategist. If you haven't noticed, and you're going to go through here, everybody has their own genre of trade. We don't get pigeonholed and say we're just options. Matt Williamson, he's also an options geek. Jeff Bierman, this is your chart geek. I might not be into charts that much. That's why we hired Jeff Bierman. Matt, he's a big, okay, market neutral guy. That means no directional bias and sells premium, okay? That's kind of his mantra. Corey Rosenblum, he's our senior strategist and resident swing trader. I've known Corey for about 20 years. He's also a CMT. By the way, if you didn't notice on here, we have 3 CMTs on staff. Ask any other education firm in this industry, okay, if they even know what CMTs happen to be. We have 3 of them on staff, right? Brandon Chapman, CMT, macroeconomics, technicals, and fundamentals. Now, Brandon also worked with us at TD Ameritrade. I'll tell you a quick story about Brandon. Brandon actually wrote a course manual at TD Ameritrade. TD Ameritrade had a class. Some of you probably took it. The class was 18 months in duration, and that class cost $24,000. Brandon Chapman actually wrote the book for this particular class. We're more than happy to hire Brandon, because I'm going to tell you something right now. You go to TD Ameritrade, you could pay $24,000. We will blow that away with what we do here at TheoTrade, and you're not even going to pay $1,000 for it. Next on the list, Steve Slim Miller. Okay, Slim's actually been trading since before I am born, and he's been trading stocks, options, futures. Slim is also kind of our in-house psychologist and cyclical analysis trader. When I say in-house psychologist, if you have trouble between the head in terms of your trades, we've got classes on it. I'll even show you the classes. That class alone is worth a couple $1,000s. Slim Miller's classes are unfreaking believable. Okay, we could charge anything for the classes. We don't. It's all incorporated here. If you didn't notice, again, we have, on staff right now, on staff, 8 full-time instructors, including myself. And we can do this because we currently have over 6,000 people on the TheoTrade site. Next on the docket, Tony Rago. He's a NASDAQ futures intraday strategist. All Tony does throughout the course of the day is just trades NASDAQ futures and calls setups. We all trade live in front of you, okay? Blake Young, CTA, market profile, currencies, futures, and commodities trader. By the way, we also have, 3 out of this group have also run money. Jeff Bierman actually ran a decent-sized hedge fund. Okay, Blake Young ran a fund. Steve Miller actually ran a fund. Okay, we've got, depth. We've got experience. Blake Young is actually our newest acquisition here at TheoTrade. Market profile. We've been looking for somebody into market profile for years. This is the guy. Also, Blake Young comes from TD Ameritrade as well. Okay, here's our second bonus. So again, the first bonus, we give you access to 97 trading classes. Those 97 trading classes come from, 8 full-time instructors. Bonus number 2, we give you 3 months unlimited access to TheoStream. And what that basically is a live trading chat room. We broadcast live, 6.5 hours a day throughout the entire trading session. Our traders provide real-time trade ideas, real-time market insights and analysis. We also do text and push notification on trade ideas. We have 5 separate trading portfolios. We have daily coaching sessions. When I say coaching sessions, coaching sessions are continued education, stocks, options, futures. And I put a huge amount of weight into this, huge amount of weight. Check this out. We'll actually answer your questions via email. And you don't have to email us and be like, so my dog's friend has this trade on, and listen, ask us direct questions. Most of us were in the brokerage industry. Most of us ran money. Ask us direct questions. We'll give you a direct answer. You can actually bounce trade ideas. I don't mind saying to you, hey, that's a great trade. Hey, that's the worst trade I've ever seen. It's okay. So bonus number 1, we give you access to 97 classes. Bonus number 2, we give you 3 months of live trading with us. 5 different portfolios, text, push notifications. You can email me. People are shocked about it. You can email me. Email me. I don't care. support@theotrade.com. Email me. Bounce trade ideas. It's another, $1,000 support trades and insight. It's all part of it. On top of it, we give you access to all of our proprietary indicators. There's 59 proprietary indicators and scans. You're like, well, what does that mean? Auto expected move, gravity points, RSI Laguerre, Quantix. By the way, I'm going to give you this one in a minute. I told you when I started tonight, I would give you one of the indicators. That's one of the indicators. NQ levels, next generation squeezing indicator. Complex position tracker, IV, rank versus percentile, unusual put options activity, SPX expected move. There's a ton more. It's like $2,000 of indicators and scans. Why do we do that? Because you need these indicators to understand some of the trading that we're doing. We don't hold anything back. We give you classes. What else do we give you? Right? We give you everything. When I say we give you everything, we give you classes. Right? Well, here, TheoTrade includes everything you're going to need to invest and trade. Classes, coaching, email access to the instructors. Any of the instructors will answer your email within 24 hours. Live trading room and live trades. Indicators and scans. We even give you mobile access 24/7. We, have an Android device, have an iOS device. We give you everything that you need to succeed. What we built at TheoTrade, we built the Netflix for traders. You name a genre of trade, we have it. It's all of it. Listen, tonight it's $297. Again, it's $297 for 3 months. What's 3 months? $297. Is this an introductory price? Absolutely not. I want to make this clear before I read everything off. It's $297, period. Okay? Is this a membership? Nope. 3 months, that's it. After 3 months, if you want an additional 3 months, how much does it cost? $297. I don't like memberships. I don't like gym memberships. You know, that's what it started with. I don't really like gym memberships. Well, how do you get out of the gym membership? You have to like give blood to get out of your gym membership. We don't like that. It's $297 for 3 months. If you want to do it again, do it again. It's another $297. Some people go, I want to take off a month. Good, take off a month. You'll come back. Everybody comes back. We have 6,000 people, okay, doing this right now. We're doing something right. And I'll tell you what we're doing right. We give people everything that they're going to need. So the class, okay, that you need to get right now is the Consistent Intraday Strategies and Setups class. The archive is available immediately. All right, it's included in this, but then we're going to give you access to an additional 97 classes. We have new monthly classes too. By the way, don't discount this. The month of October, we already did a class this month. We're going to do another class coming up very, very soon. So there's another class in here like, oh, really? Of course. Over 3 months, you're probably going to have at least 3 more classes, right? You have a live trading chat room providing real trade insights, real-time market analysis, and real trade ideas. Right? 59 proprietary indicators and scans, text and push notifications, 5 separate portfolios, daily coaching sessions, okay? And we're going to answer your emails. Do you think, and I want to ask this question, and I'm not being facetious in any way, shape, or form. You think it's worth $297? If you're just email us one time, you think I can't save you more than $297? Okay? That's what this is about. This is about, all right, the future in this business. You pick up one idea, it's going to be worth more than $297. And it's $297 for 3 months. Okay? You're like, oh, what's the catch? There's no catch. We're even going to do a money back guarantee, which I'll show you here momentarily. There's a money back guarantee on this because if you're not happy, it is what it is. Go to TheoTrade.com right now. Go to TheoTrade.com/day. Again, TheoTrade.com/day. I say go there right now because we're going to show you something in a minute. But before I go any further, I'm just going to tell you, TheoTrade, it's a completely riskless trade. All right? When I say there's a money back guarantee, listen, everybody that's here, we want you to be here, but we want you to be happy here. So it's everything you're going to need to start trading from novice, okay, from absolute novice to expert trader. And that's something I also want to detail here for a moment. So I'm going to take you into TheoTrade. Okay. And I want you to know something before we even show you what the money back guarantee is. If you've never, ever had experience trading, look, this is a start here menu. Options 101, options 201, options 301. Okay. I'll tell you what, even the most experienced trader in here, order execution part 1, 2, and 3. You think you know markets? Check this out. This is up there. That shows you how to get better fills in this business. I spent 15 years on the brokerage side of it. Huge amount of what I did at Thinkorswim and TD Ameritrade was analytics and order routing. Okay. I can show you how to get better executions. That alone is worth $297 just if you went for this. But I wanted you to understand that we're not here just into the basics. We start from the absolute novice to the most expert, extreme traders. Okay. And again, I cannot stress this enough, right? So with that, and again, I'm going to answer some questions here in a moment because I see some questions firing in over here, and I haven't forgotten about you. Look, there's a money-back guarantee. Trade with us. Trade with us over the next 3 months. If you're not satisfied, and I just want to detail something. See this word satisfied? Okay? It is what it is. Like we don't put parentheses around what's satisfied. I just want you guys to know, listen, if you want to be here, be here. If you don't want to be here, email support@theotrade.com. At the end of 3 months, if you're not satisfied, email support@theotrade.com. Provide us the details of your trades, receive a full refund. It's $297. You know, if you don't love us, we'll part ways. I'll still love you. Okay? Listen, the money back guarantee stipulations, the only thing we say, you must trade and you must trade live in the next 3 months. Why do we say that? Because we have to make this a fair shake. If we give you your $297 on a riskless trade, you have to actually put some capital to work because we don't want any people coming here just saying like, oh yeah, I didn't do any trades in the first 3 months. You got to trade. If you're willing to actually do 10 trades, okay, using any of our strategies, but you have to use our criteria. By the way, the other thing is your initial account value has to be at least $2,000. You have to follow our criteria. You can't make up your own crap. And you have to provide real account statements. This ain't paper trading, people. But if you're going to do 10 trades, we're going to text you out. We will text you out more than 10 trades. Okay? And if we text you out more than 10 trades, you're fine. Just follow our stuff. But we want you to be satisfied. Okay? I think you guys are going to absolutely love what we do here. And for $297, how can you possibly go wrong? And I'm dead serious. Email me. Email me. You got a problem? Email me. Okay? You have a question in the marketplace? Email me. That's what we're here for. Listen, get into TheoTrade now. We're going to do 30. Tonight, we're going to do 30 riskless spots. Why do we do 30 spots? Because I have to go back and reconcile, okay, tens of, like literally dozens of trades from each individual. And we give you 30 riskless spots because I can't spend, weeks of my time and days of my time just going through, okay, reconciling trades. So it's a matter of obviously size, but we also give you unlimited email mentoring. Send us your trades. There are 30 spots tonight, okay? The 297 riskless offer has never been available before with consistent intraday strategies and setups class, okay? And 97 other classes in here. It's just a phenomenal deal. And again, we don't define what satisfied is, right? If you don't love us after 3 months, we get it. We'll give you $297 back. Again, what our members are saying. And you know what? Before I even go there, let me actually take you in here for a second and show you a little bit about TheoTrade. But I want to also kind of delineate. This is, again, and I'm going to pop this up so everybody knows where they're going because the people are already asking. You go to TheoTrade.com/day. That's D as in David, A as in Apple, Y. TheoTrade.com/day. And we're there to support you. Like, listen, you could just chat in. You can chat in right now. When you go to TheoTrade.com/day, there are 30 riskless spots left. We will let you know, okay, if you have one of the riskless spots. People constantly ask us, like, did I get into the riskless spots? Listen, we had 900 and something people on chat this evening. So with 900 and plus people on chat this evening, okay, I'm going to answer as many questions as I possibly can. Just enroll now. The reason I'm actually taking you over to the enrollment form, okay, twofold. Number one, when you click add to cart, it's actually going to populate over here, billing information, okay? The reason I'm taking you in here really specifically, under phone number, put one down. Because if you put your phone number down, it will automatically enroll you for text messaging from TheoTrade. We're not asking for your phone number for any other reason. It'll enroll you for text messaging though on Theo. So that's easy enough. Also, I wanted to show you, it is a single payment. This is not, and I'll mention this 10 different times tonight. People are still going to ask the questions. Okay. We do not do a membership anymore. We used to have that a couple of years ago. We do a single payment of $297. If you want, you could even do 2 payments of $149. Okay, that's up to you. All right, like seriously, do whatever you want. But it's a single payment, okay? Or you do 2 payments of $149. But there's no additional fees any way, shape, or form in here. And that matters to me. And it matters to me, and that's why I show it. Because, again, we're not here to nickel and dime people. We give you everything. It's, kind of say this, but, TheoTrade, it's the full Monty in terms of it. And, again, there's 30 riskless spots. The web address, and I'm going to go back over to the site for a second, but it's TheoTrade.com/D as in David, A as in Apple, Y. TheoTrade.com/day. Now, if you want to see TheoTrade, this is actually what the site looks like. So up here, this is where we broadcast. Okay. When I say where we broadcast and we will broadcast live throughout the course of the day. This is actually, I paused this one because it was being broadcast, and this is actually Corey Rosenblum's screen. We actually have a broadcast, in fact, coming up, okay, at 7 p.m. Central Time. And that's actually, we call our Wednesday night happy hour. That one's actually going to be Matt Williamson tonight. He's going to be talking about the ups and downs of neutral earnings trading. If you're enrolling right now, hop into Matt and listen to Matt tonight, okay? He's 7 p.m. Central Time. Literally go in there, okay, and listen to him. I mean, it's the member chat room, okay? Down below, this is where all of our clientele are, of course, talking to one another. So I'll just kind of scroll back for a second because, again, somebody was asking me about some earnings trades, today. Did I post any e-flies? Okay. I was frustrated today. I closed the SPY put for a decent profit, but the butterflies didn't happen. Okay. And by the way, here's Mino saying, yes, the SPY put was a diamond today. Okay. So SPY puts did great. Bought. Look, this is a gentleman. This is Jamie G, right? Bought for 70 cents, sold for 333. Thanks for that one. These are people that have literally followed my trade. And in any given day, there are thousands and thousands of individuals in the chat. Okay. So again, this is what the TheoTrade, chat room looks like. There's also the start here menu, as I showed to you. Okay. But people want to know about what the classes archive looks like. Okay. There's 97 classes, day trading classes, technical analysis, option strategies. I'm going to click on option strategies for a second because that's me. I'm the resident option geek in here, right? Weekly options advantage. Okay. The next big short, the risk twist class, how to collect income being short, in-out spreads. Okay, fruit fly for consistent income, straddles class, guide to surviving and thriving in extreme volatility, earnings classes, maximum returns with infinity spreads, guide to maximum edge trading earnings. Okay, tracking unusual options activity, gamma irons, controlling your risk. I'm telling you, you name it. Okay, you name it, it's in here. If you want to see what a class looks like, here I'll click on gamma irons for a second. You know why I'm clicking on gamma irons? Look, it's broken into 3 different parts. Okay. You can maximize this to a full screen, kind of minimize this. This is where you download the slide decks. This is TheoTrade. This is what it looks like, right? So again, you can search. All of our archives are searchable. We built like a Google search engine into it. Just go here again. It's TheoTrade, theotrade.com/day. It's $297 today, and it's a one-time payment. Now, again, I'm going to answer a couple of questions here momentarily. Just wanted you guys to see this. This actually comes from a gentleman by the name of Jeff. It says, thanks for the reply. Okay, your email clarifies the confusion I had. I would like to add that I've only been part of TheoTrade for a couple of weeks or so, but wanted to say thanks for creating something that absolutely destroys all other monthly investor education services out there. You guys have nailed, the simple yet brilliant formula of providing education for all styles of trading, from novice to pro in small, digestible bites, on a daily basis through live trading. Thanks for all you do. That comes from Jeff in Toronto, Canada. Again, this is everything you get today. It's $297. Of course, the consistent intraday strategies and setups class, the first bonus, is an all-access pass to TheoTrade. All right, push notifications and live trading and 6 hours of the chat room a day. Okay, trading indicators and scans. The second bonus is 97 trading classes, and you get access to them: day trading and swing trading and technical trading. It's TheoTrade again. /day. Again, I'm going to answer some general questions here. Oh, this comes from Curtis. It says, please allow me to impress upon how incredibly valuable your first hour in the chat room was today. Okay. Your true concern for the welfare of your clients and listeners is unmatched in the industry, and you gave incredibly practical advice for those feeling pain. This was on a day the market was just getting hideous, okay? Almost as if you were the personal trading coach. It was amazing. I only wish all of my I don't want to sell in case it keeps going higher friends were listening, okay? Keep up the great work. Thank you. And this actually comes from Curtis. He's actually a former institutional portfolio manager. So again, if everybody follows me over to theotrade.com/day, the reason I'm having you follow me to this link, all right, is this is where the indicator is available. If you actually go to TheoTrade, and again, I'll reiterate this one more time, it's theotrade.com/day. Scroll down, towards the bottom of the screen, and this is actually where, the indicator, that quant indicator for Thinkorswim, is available. Again, theotrade.com/day. For those of you that are enrolling, you need not run to go download the indicator. We have those indicators on our site. Again, it's theotrade.com/day. Let me get to a couple other quick points over here because questions always come up. This is from Todd Summerall. Don't know if you remember, but I emailed you a few weeks ago and told you my delta was positive a couple thousand or more. You told me to smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. Okay. For your information, before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want. I did, Todd. So thank you very much. But yeah, it's actually a great email because I love emails like this because people ask, can I ask like real questions? Of course you can. That's what we're here for. All right. Yeah, somebody said, does your archive include courses on volatility? Man, that's my expertise right there. That's literally, like when people ask about my expertise, oh, it's options, it's this, it's that. Really want to see my expertise? Okay, it's everything about volatility. So surviving, thriving, volatility crash course. Okay, and the volatility crash course is actually VIX volatility spreads. So it doesn't really say that, but this is a class specifically on trading volatility products. Okay, and when I say it's a class on volatility products, right, it doesn't get better than this. Like there's nothing out there that anybody is teaching that's to this level. Okay, and by the way, I will put my money where my mouth is. If you ever find anything on par with what you're seeing here at TheoTrade, let me know. Because I'm going to tell you right now, okay, nobody can keep up. We have 8 instructors. Every one of our instructors has a minimum, okay, of 15 years of active trading experience. Most of us have 20, 25 plus years of experience. I have 22 years of trade experience, okay? I grew up around traders, but I'm 22 years in, and that's actually on the lower side of our group here at TheoTrade. I mean, this is like, a team that's unrivaled anywhere in the industry. Let me actually answer a couple of questions. Again, as you guys are enrolling, go to theotrade.com/day. I will read off the names. I will read off the names of those, okay, that have enrolled and are part of the riskless trade. And the riskless trade is really simple. The first 30 people that enroll, okay, there's no risk to you. If you're not happy after 3 months, we'll give you your $297 back. Pretty much that easy. A couple of general questions, and then I'm going to get into specific questions. Some general questions. People always say, what do you need? You need a laptop. You need a laptop and you need an internet connection, right? Okay. We're going to give you everything you need from absolute start to, from getting started, novice to the extreme trader. And I'll tell you this, you can even come in here if you just had like a tablet now. Trading, the technology has gotten so good, right? Tech has gotten so good that you could do this all off of an iPad, I believe. In fact, I'm trading on my iPad a lot more. So an iPad, internet connection, I think you're good to go, right? Listen, the second thing, this is not a membership. You're not going to be auto-renewed, or you're not going to bill you again, right? So I just get that out of the way right now, because I'm a little bit nuts about that. I don't myself like memberships. In fact, when we were building TheoTrade, we always talked about like, hey, let's make it a membership here, and people can come and they can sign up for everything here. But that's just not, okay, that's not what we're about. People get upset, hey, it bills you $99 a month. We don't do that anymore. You sign up for $297. If you want to do it again after 3 months, it's $297, right? By the way, I have some great questions coming in that I'm going to hit here in a second, okay? So bear with me here for a moment. If you asked a question, I'm going to get to it here. We're now providing weekly videos, okay? If you cannot tune in at all during the week, we get it. We're providing weekly videos done on Fridays, and it talks about different spread trades. It's not even intraday trades. It talks about spread trades, some opportunities. Those weekly videos include infinity spreads and in-out spreads, gamma iron condors. You're going to love it, okay? The next thing here, number 4, okay? Number 4, we archive everything. We understand not everybody can watch, okay? In fact, not only do we archive it, every word spoken on TheoTrade is archived. You can then play it back on your mobile device, and you can actually play it back at like 2 times the speed. I sound like a chipmunk, but it's pretty cool. So if you provide, when you're enrolling tonight, if you provide your number, specifically your cell phone number, okay, we will send you text messages. Now, the text messaging, it's not crazy. We're not firing them out every 2 minutes, so don't panic about too many text messages. You can also download TheoTrade Mobile. You can look in the iOS store. It's called TheoTrade Mobile for push notifications, okay? You can email us anytime and receive a response within 24 hours. By the way, please, got to understand, there's 6,000 members, right? I'll spend 3-4 hours a day answering emails. All of us do. That's okay. That's part of what we do here. And we really believe that that is necessary to learn this business. But sometimes it takes up to 24 hours. So don't email me 5 minutes to go to the close on an expiration Friday. Be like, yeah, I need some help. Because I'll tell you what, the brokerage firms now, you're not getting help at Charles Schwab, people. I mean, Charles Schwab now is going to have 28 million brokerage accounts. Did you know that? Charles Schwab now owns TD Ameritrade. They're going to have 28 million brokerage accounts. You ain't getting help there. I mean, this is it. You're paying $297 for 3 months. You're going to get help here. And you know what? Charles Schwab and TD Ameritrade, they love it because we do provide that assistance that you need, right? Number 8, you're going to gain access to every course that's been done in the previous 4 years. Every class, every coaching session, live session, everything is searchable. If you name a trading topic, I bet you anything we have an archive on it. And people say, what about market profile? Boom, we got that. What about doing pairs trading? We got that. You name the most outlandish technical study, and I bet you we have an archive on it. We've been doing this now since 2016. Okay, we're actually going to come into our 5th year anniversary right now in January. Okay, number 9. All of the trades that we discuss here at TheoTrade can be done in an IRA or retirement account or with as little as $2,000. Okay, we at TheoTrade can help you get approved for options at several major brokerage firms. People always worry about that. Don't worry about it. People go, the brokerage firm wouldn't approve me. Okay, we can help you with that. By the way, remember, there are 30 riskless spots available. In fact, I am now going to read off, okay, the names of those that have enrolled. It takes me about 4 or 5 minutes before I see that you've enrolled, so do not panic if you've enrolled, okay? I will read the name off here momentarily. Listen, get results, take action, enroll for TheoTrade now because there's no risk to you. So let me answer a couple of generalized questions on here, okay? And I'll get down to those, and I'm also going to read off a couple of names here, albeit briefly. So, yeah, you know what? I'll just pop this up. It's theotrade.com/day. Actually, somebody asked me to pop this page back up here, so go for it. And I'm going to answer some of your specific questions. Again, it's theotrade.com/day, right? So, some of those riskless spots, okay? I don't want to butcher the first name, so I apologize for this. Himanashu P. from California. Emily M. from Texas, Jean C. from Texas, Phil B. from Kentucky, Lynn S. from Texas, okay, Panjak J. from California, Ken W. from Missouri, Jim W. from Canada, Harry D. from Hawaii, Eugene O. from Maryland, Okan E. from Michigan, Solomon N. from California, Michael S. from Virginia, Robert C. from Florida. Okay. Again, it takes me about 4 or 5 minutes before I see the name. I think I just read off about 12 plus names in there. Now I'm going to actually answer some specific questions for you guys. Again, I'll read off names as they come in here, if they come in quick enough. I don't want to keep everybody on here forever, but let me get to some specific questions. Dennis, this one just came in a second ago, and I love it. Dennis said, how do you get around the pattern day trader rule? You sign up for TheoTrade, Dennis. No, I'm just kidding. Dennis, to get around the pattern day trader rule. So day trader restriction, okay, what's called PDT restriction is only in FINRA, okay, and SEC registered products. What's FINRA and SEC? It's the regulatory bodies. So what you would want to do, if you want to get around the day trading margin restriction, you use products that are not regulated by the SEC and FINRA. Okay, what are those? Futures contracts. But futures contracts are big and scary, right? So they came out with something called micros, and now they have options on micros. So instead of trading futures, we can actually trade options on futures, which are exactly the same thing as trading a regular option, okay? And now they have micro options on futures, which are tiny, tiny little contracts. It is freaking utopia out there, and there is no day trader margin restriction in there, Dennis. It's wonderful. So it is what it is. And you know what? We teach a lot about, by the way, micro options on futures only came out fairly recently, and they are quite wonderful. Okay. By the way, Ricky, I think I already got this one. It says, in the trades that we did today, does the number of contracts matter? No, because these days, these days you pay about 65 cents a contract, depending upon the brokerage firm, about 65 cents a contract. So neither here nor there. The number of contracts you do, I tell everybody, be Captain One Lot. Wear a cape that says Captain One Lot. Just trade one contract. You got to get the methodology down. I don't want delusions of grandeur, and I hope you don't. I hope you guys appreciate that. Again, this is trading. There's a learning curve, right? You got to learn small and scale later. Okay, to continue on here, James asked a question, said, so did the cumulative tick help in your SPY trade today, or was it the VX that triggered your trade? James, the answer is yes, both. Okay. What actually brought me to looking at the market was the tick started to nosedive pretty readily right out of the gate this morning. And then the volatility started to pump in. That was it. I fired off contracts just on that on those two variables. Okay. And that's par for the course for me. By the way, a couple of more names came in, so then I'm going to go back to questions. Okay. Henry A. from Texas, Bradley P. from Arizona. Okay. Eric L. from New York, John G. from Ohio, okay, Niran A. from Georgia, Julie V. from Alabama, Bill S. from Tennessee, Sean B. from New Jersey, Glenda C. from Indiana, okay, Raymond B. from North Carolina, and Craig S. from Kansas. So again, it takes me about 4 or 5 minutes before I see some of those names come through, but we're already up to probably about close to 20 of the 30 spots are filled. And again, I can see a lot more names ultimately coming through over here. So James, it was a combination of the ticks breaking to the downside that kind of caught my attention, okay, and then of course the volatility pumping in. All right, next comes from, you talked about changes in the prices. Okay, can you please elaborate on the time extrinsic value play into the risk reward formula? So, you know, one of the things is that time value on an intraday basis, we'll deviate for a second. On an intraday basis, this is the SPX, which is a little bit too big, okay? But here's the spiders. On an intraday basis, time value is not going to play a critical role, especially when there's like a day or two to expiration, because you're only burning an option for anywhere from about 4 to 5 hours at most, right? So what's an option worth? $1.71. You know, you're going to actually learn in the consistent intraday strategies course that puts in many cases can have viability over calls. And it has to do with just that. It has to do with volatility. Okay. The enemy in intraday trading isn't necessarily directional bias. The enemy of intraday trading, okay, is actually volatility. Because if volatility is to go demonstrably lower, there, okay, becomes the risk. So time value is going to be negligible. And again, the best way to price an option, like if you look at the option, is to look at the option above and or below it, okay, to kind of figure out what its price is going to be. And we talk about intrinsic and extrinsic value a little bit in the class, but not huge. By the way, another couple people, Greg M. from North Carolina, just saw your name come through as well. All right, so I've gotten most of the questions. And again, I don't want to keep people here all night, but Brenda Roberts said, how many intraday trades per week can you do in an IRA? So if the IRA, if you want to talk about day trading margin rule, if the IRA is over $25,000, you can do as many day trades as you possibly want. You could do 1,000 day trades, you know. If the IRA is under $25,000, then you hit the pattern day trader rule. But now you can circumnavigate the pattern day trader rule by using options on futures. So Brenda, the real answer is there is no limitation anymore. You just have to know how to circumnavigate some of the rules. You know, when it comes to the brokerage side of the business, okay, I'll give you every nuance that you need. And I really mean that. Like if you're the brokerage side of the business, you're like, well, what about this? And what about this? And what happens if I do this? I can give you every answer in there. And give you every answer because I spent, again, the better part of my, professional career inside of the brokerage business. And I don't mind taking you through like, hey, how do you circumnavigate some of those rules? I understand the rules. I had hundreds of people actually reporting through me, and I held a Series 3, which is futures. I held a Series 4, which is an option principal, a Series 7, which is a broker-dealer. I held a Series 24, which is a principal broker-dealer, and I held a Series 66, which is an investment advisor, because I also did run money at one point at Thinkorswim. So I know a lot of the rules. That, and I'm a damn good test taker. That's why I have all those brokerage licenses over the years. Okay. All right. Somebody said, or do you change your account from margin to cash? Ricky, I don't like cash accounts at brokerage firms. Don't do that. Don't do it. It's not worth it. That's like an old school like thing. I just don't like it. Okay. So you don't have to open up an IRA account. You can use a regular margin account. Any more than $2,000 in a margin account, you're fine. I like to trade in my IRA, and I don't mind saying that. I trade in the IRA a lot because I'm at the point in my life and in my, in terms of my career, I don't need capital constantly. So it makes me feel good earning on a, tax deferred. I almost said tax free. Ain't nothing tax free in this world, but on a tax deferred basis. I love it. So with that, I've kept you guys here way too long. Again, I thank each and every one of you for attending. Those of you that are enrolling, you can hop in and listen to Matt Williamson literally tonight. Otherwise, I'm going to kick off tomorrow morning. First thing in the morning, I start at 9:22 Eastern time. That's 6:22 Pacific. I go live in the TheoTrade chat room, 9:22 Eastern time. Again, it's TheoTrade.com/day. Thanks a lot, everybody, for tuning in tonight. Have a great evening. Bye-bye.